Good morning, everybody. We are back once again on another market open. It has been a very long time. It is October 22nd, 8:46 a.m. Had to be 1 minute late just because we had to be 1 minute late. And we are officially back. We got the bricks in the background. We got all the other random stuff that's in the background. We got that Robinhood whiskey that I'm going to be drinking at the end of the year if Robinhood keeps doing what it needs to do. And we are back once again for the market open. Thank you, everybody, for being here. I'm excited to be back. Got back yesterday. I was going to do the market open yesterday at 8:45 a.m. like usual, but we were supposed to get at the airport at 6:30. We ended up getting at 7:30, and then we just got late coming back home. So wasn't able to do it yesterday. Decided to sleep throughout the entire day, so I missed the market close. But now we're back. I'm rested. It's been 2 weeks off. It has been a long time since we got into the groove of things. We got to do, I think, 4 or 5 shows, including the Tesla event and the Robinhood event in India. So, I thought going into India, I would get to do the market open every single day. That didn't happen. I thought I would at least get to do the close 3 or 4 times. That didn't happen either. And it kind of makes sense because not only is the time difference crazy, but just, you're in a whole different country. There's so many different things going on. It was kind of hard to keep up with everything. But we're back. And I'm excited to be back. So thank you, everybody, for being here. We got a lot to get into, got a lot of thoughts in terms of what's going on in the market. I did keep up with the markets for the past 2 weeks, even though I haven't been able to go live. So I have a lot of thoughts and ideas around what's happening. I landed yesterday, and the first thing I saw was Donald Trump working at McDonald's. So it was just a very interesting experience as an American coming back to the country that I love and seeing that as the first thing. I was like, oh, wow, that's some interesting stuff to analyze. So we got a lot to get into in regards to the election, how it affects the broader market. What's going on with the market at all-time highs right before the election and what that means coming into the election. The 10-year surging to about 4.186% today. Not the best news, but there is a cogent and rational explanation, I guess you could argue, for why the 10-year is doing what it's doing. Gold hitting an all-time high. Oil prices still teetering around $68 to $70. There's just a lot going on. And then finally, Q3 earnings has been unbelievable. 80% of the companies that have reported so far have beat earnings. Lockheed Martin and General Motors today smashed earnings, like absolutely crushed earnings. We're going to talk about those companies. And like the sort of a revolving thesis I have is that if earnings are good, the broader market is going to have a good end of the year. So we got a lot to analyze there, go deeper into that, and discuss more and more in terms of what's happening. So we're back. Thank you, everybody, for being here. I will do Q&A at the end of today's open. We'll probably have a longer open, 3 hours around on the open. So we'll probably end it around 11:30 Eastern. So if anyone has any questions on the trip and kind of what's been going on in general, we'll do Q&A towards the end of the stream. Midwest, Gannicus, Switchblade, Matt Money, Arun, Mila, Sanjay, Emil. Thank you, everybody, for being here today. Blake, Chad, June, Ricardo. Ty Gordon says, who the hell is this guy? This is the guy that's been doing the market open for 2 years and took his first 2-week break. To be honest, I didn't like the break. I liked it because I was with family, but if it was for any other reason than seeing my grandparents in India, I don't think I would have been able to take this long of a break. And I'll talk about it more later, but it's just one of those things where when you're in a routine, I mean, like imagine you have a job and then you just don't have your job, or you just don't go to your job anymore, right? This is a job, but this is, much more important to me than a job because it's such a personal, intimate interaction about analyzing the markets, and not being able to do that every day, you kind of lose a little bit of purpose. Now, thankfully, I was with family, so the purpose was family, and that was able to replace it. But if it wasn't family, I don't know, like just taking a general break. I'm sure people even take a general break from work at their regular jobs. You tend to kind of feel a lack of purpose. And so it's one of those things where humans need purpose, and I'm back to having purpose, even if the stock market is that purpose. Chris, what's up? Nolan, Katie, Victor, Gene, getting that emit YouTube notification is like getting that "Are you up?" text. I love it. Thank you, man. Thank you for being here. Dougie, Tesla, Nolan, Bay Ray, unemployed. That's another way to consider as well. Unemployed as well. John, Brian, Gil, Vibob. Did you gain a couple pounds? No, I actually lost a couple pounds going to India. I mean, I ate a lot in India, but it's also one of those things where India is like, it's kind of one of those things. It's not like I took a vacation in Italy where I'm eating pasta all day. So it's one of those things where didn't actually gain a ton of weight in India. The goal is going into 2025, though. I have, a big fitness plan I'll tell you guys about later at the end of the show. I have a bunch of different personal and professional goals, which is another thing I want to do during Q&A today. I want to talk about personal and professional goals going into 2025 because I thought a lot about it on the plane. By the way, I got lucky on the plane, dude. The middle seat going back was empty. The middle seat going back to the United States on 15 hours was empty. And the woman sitting next to me on the window, she was a United employee. So I guess she wasn't on duty. So it was like that was the reason the middle seat was empty, because they hooked her up with a good seat and I got the aisle seat. And then she left for half the flight. I don't know. I guess she wanted to talk to her coworkers at the front of the plane. So like the whole seat, the whole kind of the 3 seats were empty for like 5-6 hours. And I was like, wow, that was not pretty bad. So we'll talk about more of that in professional goals, personal goals as we get into the end of the stream and keep going from there. Bayer says, you look slimmer, no lie. Yeah, I think I did shed a couple pounds in India just based on like the types of food I was eating, even if I was eating a lot more food. All right, so we've got a lot to talk about. Again, I'll answer all the questions and different stuff you guys have about India. I don't want to get caught up on that at the beginning of the stream because we do have a lot of earnings to discuss and go deeper into. So thank you all for being here. One final thing I'll say before we get into it is I missed everyone. I got a lot of messages. Like I didn't expect the amount of messages I was going to get of people just being like, yo, where the fuck are you at, bro? It's like this is getting annoying now. And I really, really appreciate it because at some level it does show that people actually care about the content. They want to support the content and they want to tune in every single day. And if you got something that people want to tune into, then you've got to show up. You got to do the work and you've got to keep building from there. And so thank you all for being back here. Thank you all for staying. Thank you all for keeping up with the content on Twitter, keeping up with the entire journey. A lot of you guys don't have to care that I went to India or care about my personal experiences in India, but a lot of you did care, which just shows to me that, this market open is becoming deeper than just a show. And hopefully it's becoming a real community that we get to create over the long term. All right, let's get into it. We got a lot of stuff going on. I think we should start off with this bad boy because why not? NVIDIA is currently at all-time highs. It's down a little bit in the pre-market, down about 0.1%, but it hit 144 yesterday. I guess my question to the chat to start off with is, how are you guys thinking about this all-time high on NVIDIA? I am quite frankly shocked that NVIDIA got to all-time highs before earnings. Broadly speaking, the market getting to all-time high before earnings and before the election and before, I guess, majority of the companies discuss earnings, which, maybe the majority of companies produce bad earnings in terms of big tech, which we'll see this week and next week, and that could hurt the market. But if they don't, if the banks are any indication, or Netflix is any indication, Netflix being at $772 right now, it does seem like big tech is going to perform. They're going to put up the numbers. And if they put up the numbers, that's going to go very well. My high-level thoughts on NVIDIA. TSM, this company right here, down about 1.2% of the pre-markets, hit a high of 212 last week. They increased their guidance by $1 billion. They increased their operating margins. They increased their fiscal year 2025 full-year guidance. It just seems like their AI demand, or at least what they've been talking about, AI demand is not going anywhere. So if that's the case, you're going to have a company like NVIDIA that is highly contingent upon the earnings of TSM, and TSM is also contingent on the earnings of NVIDIA. So both of them have a very unique relationship. But if one is doing good, the other one tends to do really good. And NVIDIA right here at 143, 3.53 trillion. I think NVIDIA is, how far are they from Apple? Apple's at 3.6. Yeah, so NVIDIA is like 2 percentage points away from overtaking Apple as the most valuable company in the world. Maybe that happens today, maybe that doesn't. But it's just incredible to see what's happening on NVIDIA. Farrell NYC says right here in the chat, NVIDIA is going software. This is another part of the thesis. I listened to Jensen over the past couple of weeks at some investor conferences he was at, and I read some transcripts of what he said. And one of the things he identified as their larger moat, the conference, or not the conference, the podcast with Brad Gerstner that he did, he talked a lot about software and how NVIDIA's ROI is not just going to be from the GPUs that they sell, aka the hardware that all these hyperscalers are buying, but things like the CUDA stack. And if that software, which I think is on track to become a 1 billion ARR TTM run rate in terms of their core earnings, it's obviously a small part of the 30 billion they take in revenue, but it is becoming a larger part. If that ends up scaling the way we think it's going to scale, then NVIDIA is going to do very well. And NVIDIA is going to have a lot of other moats to it outside of just the GPUs that they're selling. On top of that, we are seeing the startup market receive an insane amount of valuation demand, which all of it comes back to NVIDIA. I'm not going to go deep into this topic right now. We'll leave it for after the bell, but Perplexity, AI search engine startup, just raised, or is in talks of raising a $9 billion valuation. This company does 50 million in revenue. They're not profitable. And, they're doing about 250 to 300 million search queries a month with AI generated responses, which is great. Google's doing 8.5 billion a day. So the dichotomy between them and Google is massive, and they're really trying to go after Google's lunch. They were $520 million in January, $3 billion in June, now $9 billion in October. The reason I'm bringing this up is because if they raise $500 million at a $9 billion valuation, I would imagine half of that money is going to be going to the hyperscalers or to Nvidia themselves. Probably not Nvidia themselves, because they probably pay like Google, Amazon, or Microsoft to just rent GPU compute workloads. Which is going to help the hyperscalers, but the hyperscalers then are going to have to buy more chips from NVIDIA to be able to serve the demand of Perplexity. And so it just seems like NVIDIA stock is the epicenter of where all this demand, whether it's AI startups or actual earnings from TSM, comes back to. The stock was $90 back August 5th. I didn't buy that dip. I bought the dip on Robinhood. So that was a dichotomy of in terms of how I engaged with the dip. But I know a lot of people that were bullish on NVIDIA and had a long-term thesis. They bought the dip on August 5th. And I think you got another chance going into that $97, $98 range after earnings, or very close to that, at like $102. And it seems now, looking back in hindsight, that at least for the short term, maybe 5 years from now, NVIDIA cannot put up these astronomical numbers because it truly is cyclical. But at least in the short term, fiscal year 2025, they're going to put up $5 of EPS, it seems likely. And that dip at $90 was just as good as a dip of $14 on Robinhood, or a dip of $20 on Palantir, or a dip of $220 or $192 on CrowdStrike, I think was the 52-week low. Like, August 5th seems to have been the most amazing opportunity for bulls since COVID. I mean, the prices that we got during that time in 2 to 3 days, we haven't seen those prices in a long time, and I don't know if we're going to see those prices again. So far, it seems like the macro economy is holding up. We're going to talk a lot about macro in a little bit. We've got Tom Lee's prediction on what's going to happen in the macro as well. He's actually been wrong the past couple months in a good way, so we'll discuss that. But everything goes back to NVIDIA. And if everything goes back to NVIDIA, I'm not buying NVIDIA right now. I don't have it as a long-term position. I have never developed a position, so I'm not jumping in right now. I just feel like the risk reward is not amazing at $140. But could this thing get to 165, 170 by the end of the year? Yeah, it's very possible. And if that's, buying it at 140, that risk reward is not amazing. But if you've been buying it since 80, 90, 70, 60, you've been buying it for the past 10 years, I don't see a reason to sell. And even if you bought it at 120, it's like, is there a reason to sell at 140? You might be compelled to take some profits. Yeah. But if it's probably going to 150, 160 on a stellar earnings and a demand outlook that is not changing, because Perplexity at $9 billion is not going to stop at $9 billion. If Perplexity is really eating a little bit of Google's lunch, they're going to be worth 30, 40, 50 billion over the next coming years, because they're just going to have more market share. There's just going to be more demand coming to them. It just seems like NVIDIA is going to be the beneficiary of all of that. We got TJ Riley says I'm up 102% on NVIDIA. Jimbo Slice says I'm up almost 500% now on NVIDIA. Absolutely incredible. Wheeling NVIDIA. I know we got Chamu here, has been wheeling NVIDIA for the past couple of months. If you've been doing puts on NVIDIA, or selling puts, or selling covered calls on NVIDIA, you've been sweeping up some good premium back and forth. It's just been one of those stocks that this year has had an incredible run, and we just have to see what 2025 looks like for NVIDIA as well. June says I bought at 1750, 70, 100, holding NVIDIA long-term. I don't see a reason to take away from that long-term thesis. Uncle Clay's Orchard, thank you for the $10 super chat. I realized your content value while you were gone. Meet Kevin was brutal, and some other random guy literally went to the bathroom at the opening bell. Who went to the bathroom at the opening? Hey, look, I'm not going to lie. I've had to go to the bathroom sometimes at the opening bell. You just hold it in. I've gotten better at controlling my bowel movements and things of that nature, but early on when you're starting, you don't know that at 9:30 you might have to use the bathroom, and they're like, oh my god, the bells are like, it's one of those things that happens. You got to kind of get used to it. So yeah, thank you, Uncle Clay's Orchard. I appreciate that. I know some of you guys have messaged me that you've watched some other market opens and it just didn't do it for you. Well, that's why I'm back. That's hopefully why we get to continue bringing value every single day and making the mornings enjoyable for everybody. Savage said, Hood, SoFi spreads printed hard. Are you looking into any other companies for spreads? Okay, so SoFi. Oh my God, SoFi. Let me show you guys SoFi. So those spreads that I got, I did not expect them to mature the way they've matured, but SoFi as a company has matured. So these are the spreads. We bought $15, $20, 2026 spreads, and they're up 105%. And I've been debating myself over the past couple of days. All right, do we sell? I put in 3,500. I'm up 37. Do I take out the initial 35 and just let the rest go? I think I will take out the initial 35. I think SoFi is heading to $12. I think it's pretty obvious SoFi is getting into its groove right now, and these rate cuts plus guidance from Noto should get us to the next level. We'll talk about Robinhood in a bit. So no, I don't have any other ideas in terms of spreads on other companies. Honestly, the only stock that I really think that's like a big name that is cheap right now is Google, but we'll talk about the concerns I have with Google. There's not a lot of opportunities in this market. You can get into the speculative names like the Oklos of the world that are currently at 52-week highs or all-time highs. They're up like 40% in the past couple of days. It's down 0.22%. The pre-market is down 22% yesterday, or up 22% yesterday. It was up 40% on Friday. These are companies that seem like they have massive opportunities, but the question is, what is the risk to reward given they have no revenue and given that they're primarily moving on narrative? And the narrative is nuclear energy. So we'll talk about some of those ideas that I'm looking at, but in terms of actual investments or even leaps that I want to buy on companies, none of them exist because things have run up so much that you've got to imagine them doubling or tripling by 2026, 2027 to buy those leaps, or at least going up, 40 or 50%, if not a double or triple. And it's just hard to see a lot of companies necessarily doing that. So we'll talk about what I think is going to go on in 2025. I think we'll get some decent opportunities in 2025 to buy some undervalued leap calls on some good stocks. But in 2024, at least for the next 2 months, I think it's kind of a just hold back and wait, which kind of begs the broader macro question, right? Which is, so let's transition into the macro right now. Chris says, are you selling before the election? I am not. And this question also goes into the broader thesis I'm having right now around kind of buying leap calls or not buying leap calls on any companies. We've got an election coming up, and that election is going to be monumental for the economy. I am not selling before the election because I think that there's a good shot the election goes well either way, and I'll explain why in a second. And if that's the case, the market doesn't have to take a dip. If the market doesn't take a dip going into the election and you see the next 3 months as bullish, I think we are going to have a ferocious bull run. I mean, I think we're going to see SoFi getting closer to 15. I think we're going to see Robinhood getting closer to 35. I think we are going to see Palantir, even though Palantir is run like crazy. I think there's a shot Palantir gets to 50. I think the valuation part is really going to come up to it if it tries to get to 50. But even if Palantir holds $40 for the end of the year, no one can complain because $40 is just up 150% for the year. It's absolutely, insane. I think the banks are going to do well. I think regional banks are going to do well. I think semiconductors are going to catch a bid. We're already seeing that with TSM, Nvidia, AMD, et cetera, even though AMD's investor day didn't go that well a couple weeks ago. But I just think we're going to have a ferocious bull run towards the end of the year. And then I think 2025, closer to February or March, when we get Q4 2023 earnings, we're going to get guidance for Q1. And when we get guidance for Q1, companies like Robinhood are going to have to hit really high growth rates that they put up in 2024. Robinhood was growing pretty much 40% for the whole year. Can they grow 40% again? I don't know. If they can't, the question becomes to the street, what is acceptable for Robinhood to grow at? Palantir needs to show reaccelerating growth into, like they were growing at 15 or 20% last year. They're going to have to show at least 30 to 35%, especially if these multiples stay. All these different companies, Nvidia, right? Nvidia is definitely not going to be growing 100%, but can they grow 57% or 70% or 60%? What is the acceptable tune for the market? I think there's going to be a little bit of a hiccup period going from Q4 2024 earnings into Q1 2025, where there will be a dip opportunity. And that dip opportunities, I think, are going to be pretty magnificent simply because of the fact that companies will have been up for, at that point, the S&P has been up 6 weeks in a row. I think when we get into that time period, you're going to see some downside momentum just because the comps are going to get harder. And we'll talk about the macro stuff in regards to inflation, unemployment. There might be some unique data that pops out during that time if we don't get enough rate cuts or if we get too many rate cuts. We'll analyze that in a bit. But my point I'm trying to make is I think this is not the time to sell. I'm not selling. I think this is the time to hold through. And I think January, February is a prudent time to at least take some chips off the table. I will be taking a lot of chips off the table, particularly because I have a lot of options. And that's when I'll be just sitting in cash and liquidating and then waiting for major dip opportunities. But I don't think that's the time to do it right now. And again, if you have Nvidia at like a $50 cost basis, none of this even matters because I think Nvidia for the next 3 years is going to be well above 50. So you don't need to worry about, all right, do I get out in January, February? But if you have some short dated options on certain companies, or you have some leaps that you want to liquidate, or you have a position that's massively overweight and you're thinking of at least trimming 15 to 20% of the position just to be more in cash, I think there's going to be an argument in the beginning of 2025 to take that opportunity. But I don't think it's going to happen right now. I don't think it's going to happen right now. And as a result of that, I think we need to be focused on if these companies can keep putting up earnings. Trump versus Kamala. So now this is also a very important thing that's going on in regards to the election. Bank of America put out some research. This is not political. So this is just purely objective. You can either believe Bank of America or not believe Bank of America. But this to me seemed pretty damn objective in terms of the methodology they used. If Kamala Harris wins and she gets her tax rate to go from 21% on corporate income rates to 28%, there will be an EPS hit of 4.7%. And these are the sectors that Bank of America said would have the highest hit. Communication services would have a 6% hit. Materials would have a 3.2% hit. Financials would have a 5.4% hit. A lot of these different sectors would have a bit of a hit. Technology services would have a 3.7% hit. Not the biggest hit, obviously, because technology has expanding profit margins, and those profit margins command a higher PE ratio, but they would still have about a 4% decline on a hit to EPS. If Trump wins and he has a tax cut that goes from 21 to 15% on corporate income tax rates, you're going to get an EPS tailwind, an earnings per share tailwind of 4%. That means companies will be doing on average 4% more in terms of their yearly earnings per share, simply because they have higher net income because they are paying less in taxes. And so when you look at it from this perspective, being completely apolitical here, if Harris were to win the day of the election, along with another thing that needs to happen, which I'll talk about in a second, I could imagine the stock market easily taking a 5% hit. Now, why is that the case? If you guys remember, a couple of weeks ago, I read a report from some Wall Street bank that was talking about this exact same thing. They didn't really highlight this methodology, but their kind of core thesis was, hey, if taxes go up by 7%, it makes sense that the market would fall by 7%. Maybe that balances out over time, but it makes sense initially the market would be like, okay, so we're projecting future growth. That future growth just got 7% of their taxes taken away, which is a direct hit to the net income, the bottom line, aka the EPS. Therefore, we should sell off stocks by 7%. And that's an argument that you can make. And so this Bank of America research kind of rationalizes that argument that I was reading in that equity report before. Now, why am I not selling before the election? I think two things are happening. Number one, I think the market's pricing in a Trump victory. From the polls I'm seeing and from the election betting I'm seeing, Trump's up by a lot. I don't know if any of that's accurate. This is the first election we've had in the history of the United States of America where we've had this algorithmic betting market where billions of dollars are tuned in to try to figure out who's going to win the election. And the betting methodology is like this new methodology in terms of how capital is allocated. But Trump's up 60-40 right now against Kamala. Maybe that's BS. Maybe that's not. If the broader market is using that as a proxy, which I think the market is amalgamating a ton of different data to kind of come up with their thesis, then their argument might be that Trump wins. And if Trump wins, I don't think there is a massive reason to sell off stocks. Now, the risk here is that if Trump wins and the Republicans win and there's a clean sweep against the House of Representatives and the Senate, which makes up the Congress of the United States, along with the executive branch, which would be the White House, and he gets to pass his tariffs in the sweeping fashion he wants to pass his tariffs, that is potentially a risk to inflation. That is also potentially a risk to the market of engaging in a trade war with China. Most of our products come with China. If it comes from China, that means higher import costs. That means higher costs on consumers. That potentially means lower EPS for these companies if they have less demand because people are not willing to pay that much for these products that we get from China. So that is one argument where the Trump trade can go wrong. I don't think that gets priced in immediately. I think that takes time and we have to kind of see if that plays out. But that is one risk to Trump getting elected. The second risk is if Kamala gets elected, however, Kamala does not get the House and the Senate, then I don't know. And I think the market's pricing this in, which is also why the market's going up. A, they're thinking Trump might win. B, they're thinking, wait a second. If she can't get a Democratic sweep across the Senate and the House of Representatives, she's not going to be able to pass corporate tax rates going from 21 to 28%, because you need to get 2/3 of Congress to agree on that. And if 2/3 of Congress is filled with Republicans, they're not going to give her that victory. Remember, Trump only got his tax cut in 2017 because he had the House and the Senate and the White House. That was the one major bill he got passed. For Obama in 2008, when he won. In 2010, the major bill he got passed was the Affordable Care Act because he had the House, he had the Senate, and he had the executive branch. Biden got the Inflation Reduction Act passed in 2021 because he had the House, the Senate, and the executive branch, and they barely had the Senate. You had Harris, who had to be like the deciding vote as the VP. But in 2017, Trump got a clean sweep. He got the tax cuts. The question is going to be, if Harris, if she gets elected, does she have the clean sweep? And I don't think she does. It seems hard. And if she doesn't, this is why I think it's a win-win for investors, because at the end of the day, you can agree with this or you can disagree with this, but we've heard plenty of billionaire hedge fund guys come on and say, look, we like it when it's divided because we're in gridlock. We can't get a lot of stuff passed. Maybe that's not the best for the world. That's definitely not horrible for the markets. And if that's not horrible for the markets and the markets kind of control the world, then maybe that is good for the world. Because you just don't want sweeping legislation to one side or the other. You don't want extreme tariffs. You don't want extreme corporate corporate income taxes. And so if that's the case, I think there is an argument that we are going to be good regardless of who wins, because no one's going to get the clean sweep. And if no one gets the clean sweep, the market's not going to be able to price in some dramatic policy. If the market can't price in a dramatic policy, boom. Like, where are you going to put your money? You're probably going to allocate that money back into stocks. And so I think that's going to be a lot better for the broader market. So those are my thoughts in terms of how the election affects the market. I will be live on election night. I'll be with Chris, Matt Money, Carlos, Doug from the chat. I'll try to get a bunch of people and we'll try to be up analyzing it and see what happens. We'll probably be up for like 5 to 10 hours trying to see who ends up winning this election. But I think regardless, if there is not a clean sweep across both sides, the market's going to be okay. So all of that to say, I'm not selling before the election. I don't feel the selling risk going into the election because a lot of people, particularly Tom Lee, felt in the beginning of September that there is a massive election risk. Even just a couple of, even yesterday, he was on CNBC and said, hey, I still think there is a little bit of a risk going into the election because we just don't know what's going to happen. Now it seems like that risk is fading more and more and more. And if it continues to fade, then that's going to be a good thing for equities to potentially go higher. So those are my thoughts in terms of what we've got in the context of the election, and we'll see what happens there. Doug says, if someone wins the election, yeah, that's the other big concern. If we actually, if we actually get an election winner, but we'll be live all night and hopefully we'll see how that plays out. Netflix down about 0.1% in the pre-markets. Robinhood down about 1.6%. We'll talk about Robinhood a little bit more after the bell. Microsoft up a little bit. They got upgraded by Loop Capital to $500. We'll talk about Microsoft. United Airlines, by the way, United, just incredible past couple weeks. United's up like 15%. It has not had this type of a gain since 2019. So United doing amazing. All the airlines doing well because oil prices continue to be down. SoFi, 1034. We'll talk about SoFi in a little bit as well. I think SoFi is bullish. The chart looks bullish. The breakout looks bullish. The volume looks incredibly bullish every day, kind of surpassing the average volume, along with the fact that I think shorts are starting to cover. We'll get an update in about a week if shorts are covering. So I think SoFi is very bullish. We'll talk more about them. They've had a bunch of different press releases. I think $12 by the end of the year is not too crazy. And so we'll see if that can play out. Silver. Let's talk a little bit about silver. So I did add a new position to my portfolio. I bought silver. Not a lot. I have honestly, like $1,000 of silver, SLV. But I bought it because my uncle, who was on the stream 2 weeks ago, that you guys got to see talk about India. By the way, I have a ton of DD to share about India. So over the coming weeks, I will be sharing so much due diligence about why it's important to go long India, because I'm absolutely convinced. I'll probably talk about it a little bit today on the Q&A at the end of the stream, why India is just like, I can't imagine not having a little bit of India in the portfolio. But he gave that kind of session on the show about India. He's been bullish on silver for a long time. I bought silver at, I think, $29.65. Silver right now is at $31.40. So I'm up like 7%, 8% on it. Not up a lot on it. I'm up 5.6%. However, there is an argument for silver. And the argument for silver is as follows. Well, there's a 3-part argument. It's a simple kind of thesis on silver. Number one, if we get into a recession, silver and gold are going to spike. So that argument I was talking about in 2025, I don't think we get into a crazy recession. I think even if it's a rolling recession, which I'm doubtful we're going to get a rolling recession, which would be a negative GDP growth quarter, just because the market's doing so well. And we'll talk about Q3 earnings as a sort of justification around that. But let's say we get that recession as a hedge. Silver is going to do very well. Silver tends to do well when we see some of those downsides in the broader economy. Same thing with gold. So I think silver is a decent hedge to that. Number two, the industrial use cases of silver are growing rapidly. And if you read some equity research reports on why people are excited about silver, along with the silver miners, the reason the silver miners are exploding is because there's so much more demand for using silver in everyday different use cases that industries and logistics and broader auto manufacturers, et cetera, feel for the commodity. And so that's itching up right now. And then finally, interest rate cuts are bullish for silver and gold. They're incredibly bullish for silver and gold. And I think a lot of people forget that gold and silver do well when the Fed cuts rates for 5 reasons. Number one, there's a lower opportunity cost, right? So when interest rates are cut, the yield on interest-bearing assets like bonds or savings accounts, even though we're not really seeing that with the 10-year, that tends to decrease. So even though that's not happening with the 10-year right now, that creates an opportunity cost for other assets. Number two, it's an inflation hedge. If you lower interest rates, one could argue that you're pricing in greater inflation in the future. Why? Because there's more growth, there's more demand, which means theoretically there should be more inflation. So that's your hedge against inflation with an asset like gold, which is why I think gold is screaming right now. Third, interest rate cuts tend to weaken the dollar. So if you weaken the dollar, because lower rates reduce foreign investment demand for investment grade assets, then boom, you've got a chance for other commodities to start going higher, like gold and silver. And then finally, there's increased liquidity. So if there's increased liquidity, you have more people getting into gold and silver, Bitcoin, et cetera. We'll talk more about Bitcoin in a second. And it's a safe haven. So when you put all those things together in terms of what happens when interest rates go down, along with the fact that, you know, we've not had a recession in 3 years, you could argue that we're due for somewhat of a mini correction that's deeper than just August 5th's yen carry trade, then having that as a hedge to the portfolio in 2025, I don't think is the worst thing in the world. It's not a massive position for me, but you know, it's honestly, I bought it because I didn't want my uncle to be making money and me not making. I was like, you know what, He texted me again. He's like, silver's up 2%. I was like, screw it. I'm in silver. I was like, I'm here. I got it. You have like 40 grand in it. I have like 1 grand, but still, I'm making money with you. To be honest, my uncle definitely FOMO'd into Robinhood and SoFi, dude. We were on the bus doing this 6-hour bus ride to this wedding we were going at. And I was showing him Robinhood go up every single day. And he was like, he already had Robinhood, but he was like, dude, fuck this shit. And he just bought like $5,000 of Robinhood there. Then I saw him the SoFi options. He was like, because it was so funny. He has his son, and his son told him to sell SoFi to buy Palantir. His son is like 13 years old because he hears me talking about Palantir all the time. He was like, Amit likes Palantir, sell SoFi to buy Palantir. The problem is they bought it a little high, right? And so I think they bought Palantir for like $39-$40, which has done well. But SoFi's run from $750 to almost $1050. And so the gain has been pretty nice. And so now he like blames his son. He was like, you told me to buy Palantir, but now SoFi's running. And his son gets upset. He's like, no, I told you to keep SoFi. He's like, no, you didn't. You told me to sell SoFi. So he's been FOMOing in a little into SoFi and Robinhood. And I think what's emblematic of that there is my uncle is just a regular guy, right? He doesn't have a lot of money in the US markets. He has a lot more money in the Indian markets, but people like him are looking at something like SoFi go from 750 to 1050. They're looking at Robinhood go from freaking 22 to 27 and from August 5th, 15 to 27. And they're thinking, how do I not have capital in these assets? How do I not have my money getting a little bit better of a return? Which brings us back into money markets. I don't know if you guys saw this last week, but money market funds finally decreased for the first time in 3 weeks, down $6 billion, which is not bad. So we had money markets decrease from 6.5 billion, from 6.48 trillion to 6.47 trillion, down about 6.56 billion, which is not bad. Still, $6.47 trillion on the sidelines is just incredible. And you got to ask yourself, all right, if the election is going to be a wash, Larry Fink, by the way, came out the other day and said, hey, he thinks this election is not the most important election of our lifetimes. He thinks it's kind of like no one's really going to care too much about it. So let's say the election's a wash. Q3 earnings are incredible. Dip opportunities need to be bought. And then you've got fund managers. Tom Lee made a really good point on CNBC yesterday. We're going to listen to him in a second. He said he went to a conference, and in that conference, when he talked to a lot of financial advisors, he asked people to raise their hand, and 80% of the fund advisors raised their hand. And the question was, how many of your clients are feeling like they're not allocated enough to equities? 80% of the room raised their hand. Now, why does that matter? Because over the past 2 years, the narrative has been don't buy stocks. Whether it's Mike Wilson, whether it's the Goldman Sachs equity strategist, whoever it is, there's these like influential people saying, nope, we shouldn't buy stocks because there's a recession coming. 2022 is bad. You have inflation, the pandemic, you have interest rates going down, blah, 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 blah. None of that actually held up against the Dan Ives thesis around tech doing incredibly well, or against the Tom Lee thesis, which is that interest rates will be a tailwind for the market, not a headwind for the market. So those two have combined together this incredible thesis around the macro and technology that has hit back against every traditional equity strategist. What does that mean? That means people don't own enough stocks, particularly family offices or ultra high net worth individuals that wanted to protect their cash. And it's really easy to protect your cash when you're getting 5.5% from money market funds. But it really sucks when you see Palantir go from 20 to 40, realizing that you have a lot of money that you could have put into Palantir and you're stuck getting 5%. And so that in and of itself, I also think can take the market higher as we get towards the end of the year. And that's not going to be, a bad thing for the broader markets. I think that'll be a overall tailwind. What does FOMO mean? Fear of missing out. Fear of missing out. That is what it means. Why did you buy silver instead of Bitcoin? So in general, my proxy to Bitcoin has been Robinhood. I've been pretty transparent about that since January. I don't own a ton of Bitcoin. I own maybe like a couple $100 of Bitcoin. The reason I bought silver over Bitcoin is two things. Number one, I didn't want my uncle to make more money in silver. I didn't want him to make all the money. I wanted to participate a little bit, so I FOMO'd into that. But number two is I feel I have enough exposure to Bitcoin via Robinhood. So to me, I'm not super angsty, especially at 67,000 to buy Bitcoin, unless it's going to 100,000. So even, the risk reward at 15 or 20, it was a good risk reward. It's not a good risk reward right now, unless it goes to 150, and maybe it does, and that's amazing. But I think there's some other proxies that you can get for a cheaper price than buying Bitcoin itself without the volatility to be able to get exposure to Bitcoin. Number two is, and we'll talk more about Bitcoin in a bit, but Bitcoin's got to start putting up some numbers. Bitcoin's been doing very well in that 67, 68,000 range. It is not the God candles that people are thinking going to 100,000 yet. The Bitcoin miners still are underperforming significantly because Bitcoin needs to really have that God candle for the Bitcoin miners to do well. I'm a believer in the Bitcoin bull run in Q4, but we're in Q4. It's almost the end of October. I mean, we can shift the deadline to January, February, whatever. But if we don't see 80 to 90,000 getting into November, you got to ask yourself, well, what's going to happen? Now, is the market waiting for a Trump election? Maybe, but Trump already is decisively winning as per the betting markets, which means you should be pricing in some of that. Maybe the Trump victory is what takes it over the edge. I don't know. I really don't know. I'm bullish on Bitcoin, but it's not to the point where I'm like, yeah, at 67,000, it's an amazing deal, just given how much it's already ran throughout the year, how much the ETFs have already bought, over 30 billion, and then how much more needs to happen for that God can't happen. Now, granted, I think it will happen, but I think there are other opportunities that are better adjusted for risk reward that also give you better exposure to something like Bitcoin via proxy. I mean, simple example, MicroStrategy. MicroStrategy risk reward sucks right now at 200. I don't think the net asset value is dramatically higher than it was before in terms of the premium it trades to Bitcoin. But if you bought it at 110, that was a way better buy than buying Bitcoin at like 62,000, right? It's just like the returns you've gotten have been phenomenal. So I think there have been certain assets that have been incredible to buy to get exposure to Bitcoin, but Bitcoin itself has not been the best asset to get some exposure. There are better performing cryptocurrencies, says Will. That's another thing. The alternative markets, i.e. the meme coins, are dramatically outperforming Bitcoin right now, and that tends to happen. Now, that's actually bullish for Bitcoin. That means that we're getting into a season where Bitcoin should be doing well if the altcoins are doing well, because there's just that much more liquidity. But yeah, I do think, there are some better asset classes to get into, and the risk reward is a little bit better. Now, granted, next year I want to start like a $500 per month to $1,000 per month DCA into Bitcoin. I think hopefully next year I'll have a little bit more liquidity, and I can, whether it's the ETF or Bitcoin itself, I'll just drop in $1,000 a month and just, that it's one of those things where you got to have in the portfolio. But in terms of making a bet that Bitcoin's going to run to 150 and I need to get in right now at 67, it's not as convincing versus some of the other arguments that exist for Bitcoin right now. The ring on your finger. I already addressed this a couple of market opens ago on last week. So let me just address it right now. I did get married. So a lot of you guys said, hey, Emmett's going to India to get married. And the wife's family gave me this. So yes, it did happen. The name of the wife is called the stock market, because I'm married to the game, baby. And that's who I got married to. Let's listen to Julian Emmanuel, who is Wall Street's biggest bear, say why you should keep owning this stock market.
Let's bring in Julian Emmanuel, Senior Managing Director at Evercore ISI. Slipped in here on Snuck in. Julian, great to see you.
Great to be here.
You make the point that it's been a tough bull market. Everybody wants to find a reason to not believe this one. It's too good to be true. Why do you think that is?
Well, first of all, because when you think of this set of circumstances, right, you threw everything you had at the pandemic. Then you had, sort of a speculative top in SPACs and profitless tech in 2021. And then all of a sudden, the Fed was doing what we knew they had to do in response. And the speed with which they did it, here we are. We're still the economy that's the envy of the world. And you're actually now at a point where at 24 times trailing, you're very, very expensive. That's probably why you saw that note this morning from our competitor. But what we would say to that is, tells us the wall of worry is still very, very intact. And I mean, if you think about it, yeah, the VIX is low compared to maybe longer run history. But actually, if you think about the inertia of the markets the last several weeks, the VIX is high, and it should be in front of probably one of the biggest unknowns we've been facing, certainly in the last 4 years, if not longer.
Carter is quick and correct to point out that we've seen 4.2% in 10-year a number of different times, both up and down. But the move from 3.6 to here has been fast. We spent 8 minutes trying to figure out what it's about. What do you think it's about?
I think a lot of the people that we talk to are surprised, because basically the thought was the move by the Fed to cut 50 basis points should underwrite the long end. And in fact, when you're doing that and the economy is not going into recession in the next several quarters, when, as you mentioned earlier, both candidates are going to blow out the budget deficit. And now in the last few weeks, there's a potential that China could at least stop exporting disinflation. That's what you get in the long end.
AKA, what he's saying here is the reason the 10-year is going up is because the economy is in a great spot. That's the synopsis of what he said. The 10-year should be going down when you cut rates, because when you're cutting rates, theoretically, the economy is doing worse and you're trying to stimulate the economy. We cut by 50, which was needed, in my opinion. It was definitely needed. But the economy ended up doing really well with the jobs reports, the CPI data, everything we're getting. So the 10-year is not getting sold off because investors don't feel like there's a reason to sell it off if the economy continues to do well. And that that essentially what I read that as is it's not a horrible thing that the 10-year is going up, even though that we're cutting rates. Now, if the 10-year continues to surge like 5 or 6%, which I don't think is going to happen after we cut rates, then we've got a real weird mismatch going on. But at 4.5 up for 4.1 up from 3.5, it's not the worst thing in the world because the broader economy is still in a good position.
Julian, we're going into year end. We have an election year cycle. So there's a lot of movements that none of us are going to be able to describe the reason for them. You have new money to put to work. Do you just go with technology at this point? I believe in fragmenting it out with crypto, emerging markets, technology, not making it as complicated as it used to be. Where do you put the money right now going forward?
So as equity strategists, we'll give you the equity strategy point of view. We love what we call the Fed rate cut playbook, basically. You go back to 1970, you look at all the rate cutting cycles, there's a very pronounced outperformance in the year after the Fed starts cutting from infotech, surprise, surprise, small caps, which might be a bit counterintuitive considering how much they took it on the chin today, but also barbelled by the more defensive sectors, consumer staples and healthcare. So to us, that's sort of the sensible way that will help you ride out if you get some turbulence, which of course, if there's a contested outcome, you're likely going to get some turbulence.
Basically saying, hey, you've got to diversify into other parts of the market besides just big tech if you get some turbulence in the economy, which you would expect some turbulence, even if it's not the election, to allow that broadening out. Now, in terms of small caps, look, I thought small caps would get a little bit more love. They did hit close to 52-week highs last week at 227. Now they're at 221. Down a little bit right now in the pre-markets. I do think the next 2 weeks up until the election, we don't know what the hell is going to happen. It is kind of crazy though, right, guys? Though, because like since September and October, we've been hearing this argument that like everything's going to crash in September and October, or there's at least going to be a nice 5 to 10% pullback, and we kind of did get that 4% pullback in the first week of September. But since then, it's just been straight up. So I think this is why Tom Lee, if you read his Sunday note, came out and said, look, we're still bearish over the next 2 weeks because we think you should buy the dip, but we do feel like buying right now over the next 2 weeks is not going to be the best risk reward because we think equities can fall. They said even the Qs can fall 7 to 8%, which would be pretty dramatic, dude. If the NASDAQ fell 7 to 8%, I think everyone would be going crazy. That would be a dip to buy in my opinion, but it kind of makes me think the more and more people are saying, hey, we need to have some expected pullback that we haven't gotten yet, that pullback's just not going to happen. And that's likely because Q3 earnings continues to do well. We have 2 minutes until the market open. After the market open, we will talk about earnings because we didn't get to kind of fully dive into earnings. But whether it's United, whether it's JPM, whether it's Johnson & Johnson, whether it's Lockheed Martin, whether it's GE, whether it's GM. I mean, GM increased their guidance by $1 billion today, dude. Like they had the CEO said we had our highest performance in 5 years in Q3. I mean, when you hear this stuff, when you like see these Moody's had their best quarter in 7 years, they said today. Well, look at Moody's earnings as well. It's just, these are not things you get in a bear market or in a recessionary market. It's just, these are not the types of results you get. Nvidia getting to all-time highs is not the types of results you get if things are scary or if things, are heading in a direction that is not positive. So although it is still a stock picker's market, the more the indices continue to do well, which S&P is up almost 24% year to date, which is another reason I think 2025 is going to be hard because 2025 for it to compound at 24% again is just a little tough for it to do. The more I think that the rest of the year is going to end out really well. And towards November, December, you're going to get some tax loss harvesting, but it's one of those things where if you're up a lot, you're going to get some profit taking. You might not get a lot of profit taking to the point where the entire market collapses, because if you are taking profits, there are going to be people that you're going to be selling those shares to. And those people, as we talked about, as Tom Lee talked about a couple days ago, are under allocated to the market. So if someone wants to buy Nvidia 170 or 165 when you want to sell Nvidia 165, that doesn't mean Nvidia has to go back to 120. Definitely doesn't mean Nvidia has to go back to 90. It just means that those dip buys in 90 were productive. And for everyone who engaged in the dip into August, it was not a bad dip to engage into. 9:30 Tuesday, October 22nd. It has been so long, but ladies and gentlemen, we are back and the stock market is now open. Wake your ass up. Here we go. Live from the greatest country in the world, the United States of America. Look, I love India. India is amazing, but I will proudly claim I'm an American before I'm in India. In America, just touching down in America, dude, it was like I felt the freedom. I felt the home of the brave when I touched down in America. So I am back to being in America live for the market open. 142 on Nvidia, down about 1% as we start off the day. Apple down about 1.19%. McDonald's down about 0.13%. Netflix down 1%. Robinhood, $27.03. We'll talk more about Robinhood in a second. Microsoft at 418. United Airlines down about 0.46%. Alibaba goes below 100. This was another debate that me and my uncle had, because he has not a lot of China, but he has some China, and he's been saying, maybe I should sell Baba, maybe I should sell Baba. And he was thinking that at 105, 102, 103. Now it's at 100. I don't know if he sold Baba yet, but Baba going below 100 is just ridiculous given all the stimulus they announced, but the stimulus wasn't enough, which we'll talk about in a second. And that's why Alibaba is continuing to have a little bit of troubles. It's still up from $50, but if you bought it at 120, expecting it to go to 150, which fair value for Alibaba is probably closer to 175, that has not worked out yet. Palantir at 42.46. We will talk more about Palantir in a second as well, down about 0.5%. SoFi, 10.45, up about 0.43%. SoFi looks like it really wants to run. It's been holding $10 very nicely, and it's been holding above 10.20 very nicely as well, which is a very important price point for SoFi. So let's see if we can get into that 10.50 range and then maybe get a breakout to 11 before we get earnings. But we do have earnings next week, and we'll see what Noto has to say. Rocket Lab at above $11. I didn't even notice Rocket Lab was $11 last week, but somehow Rocket Lab got above 11. And it's been holding 11, which has been pretty good. S&P at 580, down about 0.5% right now. Q's down about 0.67%. MicroStrategy, again, MicroStrategy fell to, I think, 204 the other day. Now it's back at 215, just risk adjusted against Bitcoin. MicroStrategy has been an incredible trading instrument. And you had Michael Saylor come out the other day. We'll listen to a clip of him basically saying, hey, I want people to short our stock because it makes the options even more liquid. As soon as he said that, I was just like, wow, like this dude really has conviction. But MicroStrategy continued to get some momentum. Meta at 573, Google at 164. You got TLT that has not performed. This thing is supposed to go up when rates come down. Rates have come down, and this thing has gone down. So maybe it's due for a little bit of a pop on another 25 bips. And again, the other reason it's going down is because the 10-year continues to go up. But this one has not really been the safe haven for rate cuts coming down. Silver up another 2% on the day, 31.49. CrowdStrike at 306. SMCI at 47. Pepsi at 174. JD at 39.78. We had earnings today for GM. GM is currently up 5%. Wow. Look at GM. 5% on earnings for GM. Also, what do we have besides GM? We had Lockheed Martin. That was another company I forgot to mention. They're down 2.8%, but that's because they were up 30% for the year. So they were kind of just priced for perfection. They have over $200 billion of backlog bookings. I mean, demand, the CFO said today, demand for their products, AKA products you use in wartime and defense, et cetera, are off the chain. So that's going very good for them. And they expect defense spending to go up by 1% over the next couple of years. So Lockheed Martin continued to do well. Again, just other sectors of the economy showing that they have the juice to put up these decent earnings. Oklo down about 4%. That's the nuclear energy play. Bitcoin 66,892. That's down about 1%. Nvidia 142 down about 1%. Robinhood 2702. TSM at 198 down about 2%. Let's look at the Mag 7. You've got all of them down except Google at 165, Microsoft at 420, Meta's at 573, Apple at 232, Apple at 237 last week. So it seems like the street is pricing in iPhone 16 deliveries to be better than expected. I read a couple of reports yesterday from Bernstein and from JP Morgan. They're kind of 50-50 on it, but they're leaning towards giving Apple the benefit of the doubt in terms of how the iPhone 16 is going to perform. So if that is correct, then maybe you see that run to 250 if we get a melt up towards the end of the year. Nvidia 142, Tesla 216. We'll talk about Tesla in a second as well. They have earnings tomorrow, which is crazy. So we're going to have to cover Q3 earnings for Tesla. Amazon at 187, and then Google right here at 165 on the day. Palantir back into the $43 range. So Palantir had a really weird price action move yesterday. Yesterday it went to like 43.30, if I'm not wrong. And then it kind of just like wasn't able to sustain it. Right now at 42.97. I think the street's kind of confused about Palantir because obviously the valuation is getting up there. However, the exuberance around owning this name has not gone down, even though it's been a little bit more quiet over the past couple of weeks, simply because they haven't had too many press releases and they're kind of in a quiet period before they get into earnings, which is going to be happening on November 4th, the day before the election. That thing is also going to be crazy. Palantir right here at 43.07. But I like the price action. I like the consolidation from 41 to 43, which is basically what's happened over the past 2 weeks. We haven't gone below 40 in 2 weeks. And if we end out a close above 40 on Friday, that'll be 3 weeks in a row. We spent about 2 months above 30. If we can get to at least 1 month above 40 and then get that final month above 40 into November, then maybe there's an argument that we have normalized $40 for Palantir, which is crazy to say, but maybe it has indeed happened. So we'll talk more about Palantir in a second because we do have some new updates on them. But Palantir right here at 43.07, I do like the price action there, and I think consolidating there is not a horrible thing. Robinhood 2691 down about 0.22%. Lucid, they did an offering a couple weeks ago, up about 2.9%. They were down 15% on that offering. Again, every name compared to Tesla in the EV market just seems like laughable when you're thinking about it. Even Rivian got downgraded today. It's $12. Yeah, they're at $10 right now. They got downgraded from 14 to 10. Rivian was a name that seemed exciting when it was inching towards $16, $17. And now the gross margin story of being unprofitable continues to rear its ugly head. And you just remember that Tesla is one of the only companies that actually knows how to pull this off. 43.30 on Palantir, right back to where it was yesterday, 43.30. Let's see if we can break above that. And if we can break above that, maybe we have some room to get right back into 44. Grab, this is another stock from Singapore that is actually doing really well. It's up 4% today. It was up 8% yesterday. Grab is basically the Uber of Singapore. So I don't know why this one broke out. I feel like I think they got an upgrade by some bank, and there was also some technical stuff I was reading about how, like, they had a 2-3 year base, and after that upgrade, you just had this violent breakthrough. But Grab, Uber of Singapore, up 16 billion. No DD on them. Just I've heard about them a couple of days ago. I've heard about them for a couple of years, but I read the report a couple of days ago, and you're seeing a little bit of a breakout on Grab. TSM 199. We've got FXI up about 0.25%. We'll talk more about China in a bit. Enphase at 91. Enphase taking a nasty decline. I think one of the other arguments is that, hey, if Trump wins, we're going to have a booming energy market, and the demand for solar is not going to be that high because energy prices are going to go lower. Also, in general, oil going lower is not good for Enphase because, like, people don't need to transition to solar if their gas prices, their electricity prices are lower due to oil prices going lower. So Enphase, good quality company. Maybe this earnings is when they officially bottom. We thought it was last earnings. Maybe it's going to be this earnings, and then you have some more upside momentum. But if Trump wins, I don't know if that's going to be the best thing for Enphase. Dell at 122, Airbnb at 135, Berkshire Hathaway at 463, Nike at 81. Nike really not moving ever since Bill Ackman bought them. Kind of been flat around that $78 to $80 range. So Nike not moving too much. They did sign a new agreement with the NBA for a 12-year partnership, which is, cool. But I feel like they've got to do more stuff outside of the NBA to get more brand awareness. But that was one thing they signed yesterday. Nvidia right here, 143, Apple at 232, Netflix at 766. And then you got a firm right here at 43.45. They're going to have earnings coming up. S&P 500 at 580, down about 0.5% right now on the day. Angad says Grab is amazing. It's a one-stop shop for everything. So India has a similar company called Blinkit. Sunday says it's a big Southeast Asia, not just Singapore. Okay, I didn't know that. I thought it was only Singapore. So mainly in Southeast Asia. India has a company called Blinkit. And the idea is you blink and your order arrives. The amount of blinketing that I did, bro, like, I would be bored and I would blink it like anything. And it just, like, I wanted to see how fast it would come. And I would give huge tips to these drivers. Like, I would give them like the Blinkit order would be 200 rupees, and I would give them like a 500 rupee tip just because I was like giving out money. But like, it literally within 7 or 8 minutes, boom, your order's there. And it was one of those things in the United States that's not going to happen because in the United States we don't have the labor to support that rapid type of delivery. And even if we did have the labor, they would be asking for a lot higher than $1 of expenses, right? Like those Blinkit drivers, I think literally make $1.50 on every delivery, which in India is worth more, but in America that would be, that's not how it would work. So the demand is there, the population is there, the growing supply of labor is there, and then you've got people that just kind of don't want to leave their houses and they would rather like blink at something and get something in 5 minutes. So that market in and of itself is growing dramatically, and I think across the world we're seeing more and more demand for those types of services. And in economies where you have 1 billion people, those can work very well because the unit economics just make a lot of sense. Palantir right here at 43.21 right now on the day. What else do we have going on? Amit, I've been watching HIMS. Seems like the Robinhood for meds for younger generation, higher premiums and upsides. Okay, so we've known about HIMS for a long time. Put in the chat if you own HIMS. This thing is at 23.24. They got an upgrade to $30 from Bank of America yesterday. Very similar to the Robinhood story in terms of its trajectory of growth and the upgrades they got and the catalyst they put out, the innovation they've had this year. I don't have a position in this. Still have to do a little bit more DD to be fully comfortable with the, if you want to call it the Robinhood of medication for millennials in terms of this one-stop shop to get all your orders. The big thing is GLP demand is massive, and some FDA rulings over the past couple of weeks have been bullish for HIMS in regards to supply and demand of Ozempic type products. And that's why I think HIMS is getting more of a tailwind. If that ruling did not happen, or if HIMS did not get into selling Ozempic or the like bootleg version of Ozempic, I don't think the stock would be at where it's at right now, but they are. right? And because they expanded to that market, the market's getting very excited for them. The question's now going to be, can they live up to demand? Can they continue to remain profitable? Can they keep growing at 60 to 80%? And can they expand into other verticals if they want to be that one-stop medical shop for millennials? But I don't know, dude. It seems like they've got a good shot, and their growth is definitely justifying that they have some of that momentum. Beaver says, I bought Hims at 16.5. Not bad. I know a lot of people bought it in that 11 to 12 range. Hims was at $3, by the way, in the beginning of 2023, end of 2022. So it's definitely done a very, like Robinhood, the lowest it got to was $6.50. Hims literally got to $2-3. And so it's been a really good long-term hold if you got in at those levels. Palantir 43.18. Where is Tesla? Tesla right here at 216. Tesla down about 1%. Joby Aviation 553. That's up 0.65%. Snapchat 1013. That's down about 2%. Nike 81.68. Walmart $80.96. And you got Raytheon that also had earnings today, up about 0.53% on the day. Do you like Cheesecake Factory? Okay, real quick on Cheesecake, and then we'll talk about Tesla. So Cheesecake Factory is up. It was up 5% yesterday because an activist investor wants them to split up the company into 3 different segments. I don't know enough about Cheesecake Factory to know if that's a good news or if that's bad news, but that is kind of the core headline that came out yesterday. And if they do break up in 3 different segments, then maybe that's bullish for their overall growth. But that's why the market had them up a little bit yesterday. I don't own Cheesecake Factory. I love the company. I love the restaurant. I go there probably 10 times a year at least, just in terms of the amount of times I visited it. But not sure if that's going to be a bullish thing to break up the company into 3 different segments. Okay, let's talk about Tesla. So let's do a poll in the chat on Tesla. What are we thinking for Tesla earnings? I have some opinions on this and some thoughts. Okay, so let's put it right here. I mean, let's just do a classic dump or pump. So Tesla Q3 earnings. Do we dump or pump? What do you guys think? I think a lot of us thought we would pump on the robotaxi event. I felt we would pump, but remember, my caveat is Elon has to give actual details. And if he doesn't give details, I thought there would be decline. And honestly, that's exactly what happened. Elon gave very little details, and those little details caused the market to get upset. Now, having said that, the caveat here is that although we gave little details, what Tesla showed off was some of the most interesting innovation that we're ever going to see in regards to the real world applications of AI. So I think it's a easy buy the dip if you have a 10-year trajectory on Tesla. However, Wall Street didn't have the justifications to upgrade their price targets or their models because they didn't have the details that were needed to figure out when the robotaxi is going to be live. That's okay. That's a mismatch between Wall Street and long-term investors that has happened historically with Tesla. But the question is, are they actually innovating and doing something special? I think the answer to that question is obviously yes. Now, going into earnings, we got the poll right now says 65% of you believe it's going to dump versus pump. I kind of agree. Now going into earnings, the problem here is that EPS growth is going to be horrendous. Energy growth will be good, but it's not going to be enough to overcompensate for the lack of EPS growth. Margins, I think they could slightly go up, but one could argue that margins will go down because they're doing this whole 0% APR. The thing that offsets it, though, is that you have to buy FSD to be able to qualify for 0% APR, which could help their margins. So I'm kind of torn on margins. I think they could relatively be flat or go up a little bit, but the actual revenue growth is not going to be amazing. And if the revenue's growth is not going to be amazing, I mean, we're talking about revenue growth that's negative, right? You're not even growing 1 or 2%. You're talking about declining 8%. Then I don't know how excited the street is going to be. Leah says EPS expectations has lowered so much. I think they have to beat. Then if Elon can follow that up with some optimism and common sense, pump. I think that's a very a reasonable argument to make, that the EPS expectations are so low that any level of a beat could help. I just think there's going to be 0 beat. I remember last year was a decent year for Tesla in terms of the numbers they were putting up. This year has been a pretty bad year. And so if this year is going to be a bad year, I don't think there's going to be a big beat. Now, deliveries did surprise to the upside at 463 or 462.9, and the street got upset because they wanted 463.5. But if that and the margins are decent and energy comes in a little bit better than expected, could I see an EPS beat? Yes, I could. And if that's the case, I think Tesla's going to do well, or at least Tesla's not going to, horribly collapse. The other argument I have for Tesla not collapsing, by the way, I thought Palantir was at 42.50. I saw Cheesecake Factory. Palantir is at 43.22. Palantir is a little bit higher than Cheesecake Factory right now. The other reason for Tesla not having a horrible earnings is because, the stock's already taken a hit. I mean, the stock was at almost 270 right before Tesla's 10/10 event. Now it's at 217. So if we want another 10 or 20% down, I mean, like, look, I don't think anyone has to be in a hurry to buy Tesla, given the earnings numbers are probably not going to be amazing. But I don't think we need to see in a bull market, which we are in right now, Tesla falling 10, 20%, because the liquidity is there to support any, dramatic moves by Tesla to the upside or the downside enough to catch it, I think, on a 5 or 7% decline. So do we get below 200? I don't think so. Is it possible? Of course. But I think it's going to be one of those earnings that's not that exciting, kind of like last earnings. And, maybe we see 2 to 3% down or up. I don't think it has to be 10 or 7% down for Tesla. Although the sentiment is bearish. Even in the poll that we just put in now, it's 68% bearish, 32% bullish. The sentiment has gone from 10, oh my God, everything's amazing, to this is just a car company that's going to take a long time for the thesis. I totally understand. I think that's reasonable. But the question is just going to be what that means for earnings. Where's SoFi right now? Wow, SoFi 1056. Look at that. SoFi 1056. Let's look at the resistance into 11 for SoFi. I think SoFi should do well. SoFi should do well. SoFi. I have my sister's spreads I'm looking at right now. Remember, I bought those spreads when they were at $4. Those are up 225% right now. So I'm not selling those. I have 15 of those left. If SoFi can get to $12, they would be worth $500 a pop, which would be $7,500 on an average cost of $930, which would not be bad. So we're going to leave those, let those play out. I think $12 by the end of the year is very possible. In terms of the resistance going to SoFi, by the way, Palantir right here at 43.40, Robinhood at 27.08. SoFi going into 11. Resistance currently I'm looking at is 146,000 shares, which is not crazy, dude. That's not crazy. I mean, look at SoFi's order book flow is so interesting. It's there's so many shares left and right, like in the tens of thousands. Usually the order book flow is like 500 shares, 2,000 shares. It's like 28,000 shares at the bid, 28,400 shares at the ask. It's pretty damn incredible. The amount of liquidity is crazy. The volume is just massive. Like already the volume is 4.9 million. Average volume is 44 million on SoFi. I think Palantir is that 44 million or a little bit lower. Palantir's average volume is 53 million. So you think about SoFi and Palantir, just incredibly liquid stocks getting a ton of momentum. And if that momentum continues to hold up with a guidance beat or with the earnings beat, which we know triple beat is probably going to happen, along with a guidance raise, then I think SoFi is going to do well. SoFi stock year to date up about 9% right here. So we're finally green. The 1-year chart on SoFi, yeah, look at that, up 44%. Shout out to Tanner in the chat. Tanner was at the Robinhood Summit. By the way, I'm going to have Crossroads on the Thursday market close to talk about the Robinhood Summit. Tanner, if you're free, I would love for you to join as well. 4:30 Eastern, if you're free, you both can join. I'll just interview you guys a little bit on your experience at the Robinhood Summit. But Tanner and Roy Crossroads were actually there, and so want to get some details on them on how the experience was. But SoFi now up 44% over the past year, breaking through 11 seems kind of inevitable unless they mess up earnings dramatically, which I don't think they're going to do. And I think if all the banks, I mean, look at the banking ETF, XLF down a little bit on the day, but over the past month, XLF is up 4%. Over the past 6 months, it's up 14%. And year to date, it's up 24%. This is not an individual stock. This is an ETF for banks. SoFi should not be underperforming at all. If the banking ETF, at the end of the day, SoFi still is a bank, right? Even though there's a tech component to them, they are a bank. If banks are going up, SoFi should be going up, just that in and of itself. And SoFi, you could argue $6, $7 or $5, wherever it was at, was deeply undervalued. It was not fair value. So you can argue that the move to $10 is not like, oh, well, that's it. You've had your run. You could say, well, it's getting back to fair value. I know there's a lot of debate on how you value SoFi, but if you could say $10 to $12 is fair value, then the move should really happen after it gets to $10, $12 and maybe make its room move up to 15 if the market starts pricing it in as a little bit more than a bank. And we're going to see. I mean, it's up to Noto on earnings to kind of see if that can possibly happen. But if not, then, where you might see a little bit of downside momentum. If so, then I think SoFi is set up for a really, really good run. Palantir right here at 43.15. You got Rivian down a little bit on the day. Lockheed Martin down about 4%. Again, a lot of these stocks were priced for perfection going into earnings, so it makes sense that people are taking profits. General Motors up almost 8%. Incredible. So General Motors really showing some decent momentum. Nvidia at 143, still holding the 140s. Robinhood above 27. Netflix at 767. We'll talk about Netflix in a bit as well. SoFi 1050. They got to get through 140,000 shares at 11, but there's tons and tons of shares at every single penny on SoFi's order book flow, which is why it's like hard for SoFi to move up because there's so much buying and selling pressure on every penny. But if you can get closer to 11, you got to get through 146,000 shares, which is not a lot of shares. And maybe we can break through that $11 range for SoFi. Tesla right here down 1% as well on the day. Oklo's down 11%. Okay, that makes sense. Why? Because it's up 140% in the past week. So makes sense that people are taking profits here. Quick story on Oklo. So I don't know if you guys if I told you this, but I wrote a tweet about this a couple of days ago. I was at a coffee shop with a friend who is a private investor, and he put in $50,000 into Oklo, this very stock that we're looking at $6. It was his cost basis. He put it into like the final 2 rounds before the company went public, like a couple of years ago. And the stock was at $8 when we were talking. So he was up on his investment, but it wasn't like for taking a venture risk, it's not like a dramatic return. And so he was telling me about nuclear demand and energy. And, his big point was like, look, I put in money into this thing, but they're pre-revenue. Their demand is large going into the broader story of nuclear energy, but the demand has not materialized into real contracts. So it's really like a startup that's public right now that probably shouldn't be public, but I put some money into it and we'll see what happens. Then he told me Sam Altman is the chairman of this company. And that's when my dumb ass should have realized, wait a second. If Sam Altman's the chair of the company, and Sam Altman just got a $150 billion valuation on OpenAI, and OpenAI, what are the biggest thing they need? It's not GPUs, it's energy. And Sam Altman's on the chair of an energy company in a sector that has been highly divested from for whatever reasons over the past 100 years, but nuclear has not been mainstream like solar, air, or wind. Then it begs the question, maybe it's worth a little bit of a gamble. Just like as one of those things to go long on, even though it's obviously a pre-revenue company that doesn't have that much momentum, just in case energy starts to take up. And then last week, you got 2 headlines from Amazon and Google that they're investing in nuclear energy facilities. I think one of those did include Oklo. I'm going to have to check that out. I might be getting that wrong, but I think Oklo was included in one of those deals. And boom, the stock is up 3x from that $6 range. So the moral of the story here is if your friend puts some money into a company, sometimes look at that company a little bit deeper, because even if on the pure financials, it looks like a stupid investment, there is a shot that like there is something greater there. And then, your friend can brag that he's up 300% and you're up nothing because you don't have any of it. So that's what I learned from Oklo. But yeah, I do imagine it's going to dip back down. I mean, $2.39 billion for the company is kind of ridiculous given that they have no earnings, no revenue, nothing. But the story is there. And that story seems pretty exciting for what's going to happen with Oklo. So that's what we got on the nuclear energy front. We also have SMR that's catching a bid. A lot of these energy companies are getting some momentum. SMR is down about 7% right now. SMR over the past month, I believe, has done pretty well. Yeah, it's up 62% over the past month. So nuclear energy, look, I'm still doing my research on it, trying to get a better understanding of it, but I will try to have some more due diligence and see where is the best place to allocate capital when it comes for energy. Also, I mean, again, with Trump's a fan of nuclear. And Trump's been trying to get nuclear in since 2017. I remember he went to Germany and was talking to Angela Merkel about how they need to be investing more in nuclear to get away from reliance on Russian oil. That didn't happen. And so you could argue that Trump is a tailwind. The kind of Trump trade includes things like nuclear energy if he starts to really get serious about making the United States get a lot more excited about nuclear. We got June right here saying, I told the chat right before Oklo broke out. I think a lot of you were in the chat talking about Oklo. I mean, a decent amount of you were saying like, hey, Oklo is something to look into when it comes to nuclear energy. I really didn't, honestly, I didn't spend enough time looking into it. It was right before India. So, my mind wasn't that occupied with brand new companies to try to get a position into. But I didn't expect that when I was in India, the stock would go from 6 to 20. It was just a hell of a run, which also makes me feel like, all right, we're going to get a little bit of a pullback. It's going to be hard for it to maintain those multiples. But if they announce some real contracts, like actual contracts that are material, that are in their billings and their bookings and can ultimately show up as revenue, maybe they can continue to maintain this multiple. S&P at 581, down about 0.4%. Qs down about 0.25%. MicroStrategy down about 2% on the day. Where is good old Bitcoin? Bitcoin at 66,884. Oh, wait. So in terms of Bitcoin, let's talk about it for a little bit. The ETFs have gobbled up a lot of Bitcoin. And when I mean a lot of Bitcoin, I mean a lot of Bitcoin. Did you see Drug go up last week? Yeah, Drug was up like 2,000% last week. Where is it right now? It's a biotech company. The stock is down 8% right now. But yeah, Drug was one of these small caps that announced something with the FDA and then boom, that one exploded as well. So if anyone got into that, you had a pretty good week as well. So look at the Bitcoin ETF inflows from October 11th, 253 million, 555 million, 371 million, 458 million, 470 million, 273 million, 294 million, $2.1 billion over the past 2 weeks has gone into Bitcoin via the ETFs. Look at BlackRock's buying 329 million, 288, 393, 370 million. Like they've been buying an average of $150 million on Bitcoin a day, which is insane, right? So why is Bitcoin not moving up dramatically? Well, people keep selling. This is the issue that's happening with Bitcoin right now. For some reason, every time it gets to a breakout phase, whether it's 67, 68, I mean, a couple days ago it hit 69, then came right back down to 66. There are people, whether it's from 2010, that are holding old wallets and that want to get rid of some Bitcoin, or whether it's people that are in the ETF that bought in at, the January prices and that are getting ready to sell. It's just some group continues, whether it's even algorithms, right, that's trying to manipulate the market until it gets its full run. There is some segment of the population that is investing in Bitcoin that is selling every time it breaks out, and there's new people that are entering in these high ranges while other people are exiting. And I think there's going to need to be a broader consolidation around the narrative in order for Bitcoin to see those levels of 75 to 80K. I know a lot of the Bitcoin bulls feel like it's just coiling up and it's coming. I kind of think they're correct on that. The question is going to be, what is going to be that one thing that opens the floodgates? And when I mean open the floodgates, I don't just mean Trump gets elected, because yes, that is going to be something that's amazing for Bitcoin, but I'm talking about retail. I mean, dude, like you can talk to anyone, presumably that is somewhat knowledgeable about the world, and they will tell you that they know about Nvidia, because Nvidia is just in the world. Maybe they're not invested in Nvidia, but they've heard of Nvidia. That type of like exuberant spirit in terms of the asset class of Bitcoin, I don't think is there right now. It's just not there. And in 2021, it was there. And that's what really pushed us over the edge. I think we need something of an event that pushes people to take out their Coinbase accounts and buy Bitcoin and not care about what the price is, because they know it's going to go up. And I don't think we have that event yet. So I think if that event happens, maybe from the Trump victory kind of starting that catalyst, then we're going to see Bitcoin go higher. If not, I don't know if the ETFs can take Bitcoin. SoFi right here, 1046, Pouncer 4297, can take Bitcoin to 70, 80,000. Like the ETFs have been buying, bro. The ETFs have been buying as much as they can buy. I mean, I feel like the ETFs are getting tired of the amount of buying they're doing. We need a lot more than people just buying IBIT or ARKB for Bitcoin to go higher. I think there needs to be a renaissance of people excited about Bitcoin. And that hasn't happened yet. So if that does happen, I think we get momentum. If that doesn't, then we'll see what happens. The miners, obviously, if you got in low on the miners, then you've done very well. WGMI down about 2% on the day. CleanSpark has had a nice run now at $12. It was at $8 for the majority of the past 2 months. So it started to see some upside momentum, down about 3% of the day. But I think if the miners start to front run Bitcoin's price action, we might see some further Bitcoin price action. But currently that is just not happening yet. But hopefully that does. Ori, thank you for the super chat. Look at crude oil. Something is happening. Where are oil prices right now? Oil's up about 1% on the day. That is a little bit of a big run, given it was down over the past week. Not sure exactly what's happening with oil, but I don't know if there's any Middle East tension or news that break out. Israel did come out. They said they're potentially getting into a 2-week ceasefire with a deal from Egypt, and that potentially might be good for the broader Middle East. Not sure why that would be pushing oil prices higher right now, but oil is up just 1% right now. And again, going to the Middle Eastern tensions, I mean, look, if Israel is going to chill out a little bit and the Middle East is not going to be as crazy, that's another reason why it's probably more bullish for the broader market. Doug says, Amit, there is never just that one thing that kicks it off. Bitcoin has almost always been sell the news. Whenever there is news, it is just a simple reduction in supply versus steady demand. Look, that's fair. And we are getting to the point where the halving event starts to really take effect in terms of the timelines from previous halving event cycles. So I think it can happen. It's just one of those things where I think a lot of people now are waiting to see it to believe it. And maybe that's why a lot of people won't participate in the rally, because they need to see it to believe it, and they're going to chase it when it goes higher. But that's probably going to help compound what's going to happen to Bitcoin if that thesis actually plays out. Amit, are you going to do the market close today? Yes, I will do the market close today. We do have some earnings coming up today. Nothing too exciting today. Actually, no, I think there are kind of some decent ones after the bell today. Yeah, it's actually not that too. It's Enphase. That's important. Well, we have Enphase today, and then we have Texas Instruments, which is a big one for the semiconductor. So Texas Instruments and Enphase, we'll talk about that today. Tomorrow is when we really get into the big earnings and start off the broader earnings cycle as well. Cool. Okay, so that's what we got going on. Let's talk about some other individual stocks now. Robinhood. Let's talk about Robinhood. So I've been buying Robinhood. I've been buying shares at 27. I've been buying shares at 26.50. I bought like 5 shares yesterday, but I bought about 600 shares over the past week in terms of that 26 to 27 range. Look, I think Robinhood is poised to continue to break out. What I saw from that earnings event, or not the earnings event, that what do you call it? That legend event was just very, very exciting. Robinhood got 2 price target upgrades based on that legend event, from 27 to 30 and from 25 to 30. And they were based on the premise that index options and futures trading are going to bring a lot more momentum for their EPS growth. And I kind of agree with that. It seems pretty obvious. So you had KBW increase Robinhood from 25 to 30, and then you had Piper Sandler from 27 to 30, based on what they said right here. Last week, Robinhood hosted its first inaugural Hood Summit 2024 and introduced a number of new products to its customer base. In addition to a new web-based trading platform, Hood reiterated plans to launch index options and future trading. In light of these pricing disclosures, we are raising both our 2025 and 2026 EPS estimates by 5%. They believe index options are going to be 10% accretive to Hood's total option volumes. Futures are going to be 5% to Hood's total DARTs, which are daily average revenue trades. And gold customers are going to account for 75% of volumes in both index options and futures trading. It just seems obvious that this company is poised to benefit from the macro tailwind that is the broader market, the wealth transfer, and now their rate of innovation. So I've been buying here at Robinhood. I think 35 towards the end of the year is not crazy, or 35 into January is not crazy. My previous price target was 25. I've raised that to $30. And, now it's just a question of seeing them continue to execute. I do think Robinhood is still contingent on Bitcoin in the market to an extent. Robinhood has pretty much said, to the stock market that Bitcoin is not that big of a deal. And we've seen the stock gain momentum outside of Bitcoin doing well. But if Bitcoin gets to 80,000, this is why I want Bitcoin to do well. Like, I know I'm sounding a little bearish in terms of what Bitcoin's going to happen, what it's going to happen to Bitcoin. But if Bitcoin goes up, I'm very happy for that. That's going to definitely help Robinhood. So Bitcoin helping will help Robinhood. The broader S&P helping will help Robinhood. If we were to get a 10% decline in the market, I think that leads to a 20% decline in Robinhood. I still think that the broader market is important for Robinhood to go up because Robinhood is a bull call in the market. So I don't want to see a 7 to 10% decline. Tom Lee's technical strategists think that we could see some downside momentum. I hope that doesn't happen. If that does, then I think that'll be a great buy the dip. But if it doesn't, then Robinhood should continue to maintain that momentum. And so that should be okay. That's what I think we're going to get on Robinhood. I think Paper Gains was up for technical Tuesday. If it was, I believe so. Yeah, I will message Jason today. I'm pretty sure he'll be live. I forgot today was Tuesday. So yeah, we'll have Jason on today. I really want to get Jason's thoughts on the new Robinhood trading app. And I want to see if he would even be compelled to potentially bring over his balance, get that nice 2% match, and switch over to Legend. I think he's going to say no, because I still think there are some restrictions with Robinhood in terms of advanced traders, but let's see if he's bullish about it. If he's excited about it, maybe we do see some more momentum and we get better traders coming to Robinhood. Any news about SMCI? Is there any news about SMCI? I don't think so. SMCI down about 1% on the day. SMCI, again, they had that screw up with the failure to file the 10K. I don't even know if they filed the 10K yet. I hope they did. I don't think they did. I would imagine they have by now. But if so, then hopefully that's all right. Yeah, I'm pretty sure I'm looking at some things right now. It seems like they filed the 10K. But yeah, no news on SMCI today right now. Let's look at the semis. SoFi right here still at 1043. Again, breaking 1050 is going to be tough, but if it can get there, then that's going to be nice. Semis right here. ARM down about 1%, TSM down 2%, Qualcomm down about 0.3%, ASML earnings were very interesting. They had 53% reduction in bookings against what the street expected. Entire semiconductor sector fell about 8% that day. Now the market kind of figured out it's an ASML issue. It's not a broader AI demand issue. TSM earnings kind of proved, hey, ASML is one part of the semiconductor ecosystem, but that doesn't mean that demand for AI isn't there in terms of AI chips. So it seems like ASML, if there's, a thesis to buy on that dip, I don't really understand ASML that well, but if you think there's a thesis, then this is a buy the dip. But it's not a broader, hey, NVIDIA is going to be screwed because ASML didn't have the best earnings. AMD down about 2.3%, and NVIDIA right here at 143 right now on the day as well. Continue to maintain that 143 level. Can you please ask Jason about Rocket Lab? I'll be teaching and can't ask live. Yes, I will ask Jason about Rocket Lab. Melanie, are you a teacher? You said I'll be teaching. Are you a teacher? Let me know. I have a soft spot in my heart for teachers because my mom was a teacher and my sister was a teacher. They're not teachers anymore, but so teachers have always been a soft spot for me. You guys are completely underpaid if you are a teacher. That is 1000% true. And we need to pay our teachers a lot more. But You know, I technically, I feel like I was a teacher for a little bit because I had my debate consulting firm. So although it wasn't like a state-based federal teacher in the school system, I was teaching. I was teaching a bunch of classes, but I wasn't like an official teacher. CleanSpark down about 5% right now. Coinbase down about 1.4%. Bitcoin at 66,000. MicroStrategy 1.56. Robinhood right here at 26.99. Okay, let's listen to Tom Lee. Let's get an update on what he thinks is happening in the market right now. We saw Julian Emmanuel basically say, hey, you got to be comfortable with owning things that are pretty expensive. You got Tom Lee saying, hey, you should be comfortable owning things that are expensive, but you should also be comfortable buying the dip, because if you do get a dip, then that's something you need to take advantage from, because there's just too much money out there that has been underallocated, and that underallocation eventually is going to lead to allocation. Means we should see some more market momentum. Here's Tom Lee, and then we'll keep going from there.
This morning with Fundstrat Global Advisors, head of research and CNBC contributor Tom Lee, who recently raised his target to S&P 6K. Tom, good to have you. I loved your note the other day looking at what S&P revenue has done in the face of declining inflation. And your general point is that real revenue has accelerated, and that kind of explains why equities have been so resilient.
That's right, Carl. As you know, many investors and pundits thought as inflation fell, and it's been cut in half in the last 2 years, that would cause revenue growth not only to hit a wall, but that earnings would stall. But instead, S&P revenue growth is going to be over 5% this quarter. And on a real basis, that's over plus 2%. And that's the strongest. It's really one of the strongest numbers in more than 2 years. And so it is a really high quality earnings season so far. And, close to 80%, or actually more than 80% are beating earnings so far. So it's a good beat season, but it's early.
Right. And how much of it is due to financials? Is any kind of tailwind, although we heard various comments about this, if a Fed tailwind does exist, is it likely to affect other areas of the economy as much as the banks?
Well, in your opening comments, you talked about industrials, and that's something to watch, because last week financials reported, and it was, pretty much universally better than expected, and financials are doing really well year to date. But the other group that's very sensitive to the Fed cutting would be industrials, and there's a lot of industrial reports this week. It's about a quarter of the S&P, but I'd say it's so far so good. And again, industrials are doing well in the face of an ISM that's kind of been at rock bottom for 2 years now.
Okay, guys, we'll go back to Tom Lee, but we do have some breaking news right now. We got new tax brackets, folks. We got new tax brackets. Here we go. This is not going to matter too much if you're not in the United States, but I mean, technically it does, because if people in the United States, have to pay a lot more taxes or less taxes, then that could affect the U.S. stock market. So here we go. Tax rates are out. 2025 tax brackets have been announced by the IRS. Here we go. The standard deduction, increases to $30,000 for married couples filing together and $15,000 for single taxpayers. That's a bit of an increase. I think it was $12,000 last year, if I'm not wrong. There are also changes to the long-term capital gains brackets, estate tax exemption, child tax credit eligibility, and more. Okay, so here we go. Federal tax brackets to 2025. 37% of every dollar is going to go for individual single payers with incomes greater than $626,000. $750,000 for couples filing jointly. 35% for $250,000, 32% for $197,000, 24% for $103,000, 22% for $48,000, 12% for $11,000, 10% for incomes $11,925. That's not too much of a difference, I feel. It's kind of the same. Maybe a little adjusted on the edges, but overall nothing too crazy. After 2025, lower taxes enacted by former President Donald Trump will sunset without action from Congress. If the provision expires, the tax brackets will revert to 2017 levels, shifting from 10% to 39.6%. Okay. Interesting. Higher standard deduction. So we have a higher standard deduction from 30,000. Oh, it was 15. It was up from 14.6 to 15 and 29.2 to 30. So that's actually not that big of an increase, but that is an increase for the deduction, which is important. Trump's tax cuts also included a higher standard deduction, which will sunset after 2025 if Congress doesn't extend that tax break. Okay. Nothing too crazy. I thought this would be a little bit more interesting, but nothing too insane. Doug says, wow, they murdered us in the 24% and 32% levels. So 24% for income above 103,000, 32% for income above 197,000. This is federal, by the way. This isn't state. So in California, you're paying an additional 13% on top of that, or in New York, you're paying an additional 11% on top of that. So It seems like it's up a little bit. I have to compare it to 2024. I don't have the exact numbers on hand. It seems like it's up a little bit, but it's not up that much. And if it's not up that much, then maybe that's not that crazy big of a deal. All right, that's what we got for federal tax brackets. Let's go back to Tom Lee, then we'll keep going from there.
Tom, how much would you ascribe the recent momentum to aspects of the election as that draws near, just over 2 weeks away?
I think that's been a dynamic. I mean, I've been fooled by seasonality because I figured from September to Election Day, markets would be very tentative because this is an extremely close race. I mean, this is a coin toss, according to Nate Silver. But something that Stan Druckenmiller said last week might explain a lot, that markets are betting that Republicans could take the Senate, and that actually could ignite animal spirits. So there may be underlying momentum that the Republicans take parts of Congress, and that's why markets are bullish.
Are you at all worried? There were some comments out of German PPI was down 1.4 year on year, Tom, but there was some ancillary commentary about worries about a reflationary period, largely due to geopolitical events. We mentioned oil coming back a bit today. How worried are you about that?
Well, I think that headline CPI could definitely get affected because oil moves dynamically, and it has an almost immediate effect on headline CPI. And we know transport costs have also spiked recently. Part of it's seasonal, but that affects headline. I think the market's going to be somewhat skeptical that could trigger a sustained reigniting of inflation. But I think the economic data is going to be a little confusing the next couple of months because, the Boeing strike itself is going to affect the jobs report. But I think ultimately the Fed is still on a path towards getting back to neutral. I think that should be the focus. And that means, stocks which have been strong are really still a buy the dip market.
So remember 2 weeks ago where it was 90% chance the Fed was going to cut by 25 bips and then 10% chance the Fed was going to cut by 50 bips. That has now changed to 90% chance the Fed is going to cut by 25 bips, 10% chance the Fed is not going to cut at all. It's like 89-11 against not cutting. I don't think there's a world where we're not going to get a rate cut. Actually, no, I do think there's a world that's going to happen. I don't know if it's as likely as a lot of the skeptics are saying when it comes to the rate cut. Not happening, but I do think there is a chance if the economic growth continues to be as strong as it is, which it has been pretty damn strong, that the Fed kind of thinks, wait a second, maybe the 50 bips wasn't a mistake, but maybe it was enough to hold us over from doing another 50 bips to end the year. Now, why I don't think that'll be a good idea is because a soft landing is supposed to be you come to the party earlier than expected, right? It's not supposed to be you come late, because as soon as you come late, boom, recession. So if we really do want to nail this soft landing, I do think rate cuts are important because we're not adding 800,000 jobs a month like we were in 2022. I know that was off the COVID rebound, but we're adding 200,000 jobs. And that was the one non-farm payrolls we got at 254,000 over the past couple of weeks, where most months we were adding 140,000. So if we're still adding less than 150,000 jobs a month, you gotta at least think of an argument that says, hey, we should still be cutting rates in a meaningful way without being scared about reigniting inflation. Now, if inflation reignites on the next CPI report, which I think is possible, even though I think it's possible, but it's not as probable given the amounts of inflation decreases we're seeing, particularly around oil, then there's just not a big reason, in my opinion, for why we need to cut rates. Bitcoin right here just went green, 67,000. Wow, Bitcoin, we talked about it 2 minutes ago. It was at 66,609. Now it's at 67,400. So Bitcoin showing a little bit of momentum right now, which is not too bad. So again, if CPI accelerates inflation, I think we're probably not going to get the rate cut because the Fed is going to be really scared. If we stay at 2.4 or go to 2.3, the market wanted 2.3 last week. We came in at 2.4. That's not a horrible thing. Then I think it's going to be very, very difficult for the Fed to be like, yeah, we're not going to cut rates because things are going great. Because as soon as things don't go great, you're going to get blamed for not cutting rates for things that were not going great. And you already didn't cut rates for 18 months. So it's not like the Fed doesn't know what it feels like to hold out a bit. It's just a question of them making sure that they have the appropriate amount of rates that are necessary for a legitimate chance for the economy to not slip into a recession. PayPal right here at 80, SoFi at 1046, S&P at 582. Again, S&P had some weakness hitting 580, did not go below that 580 level, now at 582. The broader market has been unbelievably, just incredibly resilient against the September, October drawdowns that are supposed to happen. We have not seen them. And I know these last 2 weeks until the election are when we're supposed to see them. And so we'll see what happens. But so far, it's been okay. Netflix. I mean, let's talk a little about Netflix. 768 on Netflix. They added 5 million subscribers. I still, for the life of me, cannot find anything to watch on Netflix. But somehow people do. And they grew revenues 15%. They grew their operating margins. They added 1 million more subscribers than what the street expected. Maybe those subscribers are international, so the ARPUs are not high, but still they're getting people locked into the ecosystem. People should not be subscribing to Netflix if there is a recession. Just simple. People should not be paying $15 to $20 a month on content if there's a recession. And if content's the first thing you kind of get rid of, right? When you're trying to trim down your expenses. If people have the disposable income to spend on things like Netflix, it just goes to show that there is momentum in the broader economy. And the broader economy probably is not struggling as much as people think it's struggling in the context of the consumer, which I'm also still skeptical to say. Let's go through some earnings as well. Let me pull those up. Because for 2 months, really from July until September, the conversation around was the consumer, right? Every video we watched, the consumer, what's going on with the consumer. Now it feels like the consumer is not the concern. The consumer is fine. And the broader concern is just like EPS and revenue growth targets, not really the consumer. And if that's the case, then you're going to see companies like Netflix be able to get more subscribers because they're not that worried about consumer demand. Even on the earnings that I've heard so far, the earnings calls, there really hasn't been any conversation about the consumer. It's been more conversation about rate cuts, less about the consumer. Whereas in Q2, it was more so about like using the consumer as a little bit of a scapegoat for companies that had bad earnings. So far, that hasn't happened. Sherwin-Williams, they beat revenue, or they missed on revenue by about 20 cents, missed on revenue by about $100 million, but revenue is up 0.7% and EPS is up 5.3%. You had Verizon. They had a revenue that was flat year over year. Adjusted EPS was down 2.5% year over year. Verizon right now, if we take a look at their stock, I believe their stock is down a little bit. Their stock is down about 4%. Which is okay. They're up about 20% for the year, which is not too crazy. So again, Verizon not doing too bad. You had Raytheon beat EPS up 16% year over year, beat revenue up 6% year over year. That's not bad. You had GM again beat EPS by about 40 cents, up 30% year over year, and then revenue $48 billion versus $44 billion. Let me say that again. GM put up $48 billion of revenue versus $44 billion expected. Up 10% year over year. That's a $4 billion beat. We talk about the auto market not being in the best space. It seems like people are buying cars, and it seems like people have enough money to put down payments and sign up for 6 or 7% interest rates on buying cars if GM's being able to put up $4 billion more than expected. Like, this is just something you don't see if we're headed into a recession. And so from all the arguments that I'm trying to compile around why the recession will still happen, which, yes, there's a chance, it's just harder and harder to imagine when you see companies putting up the types of earnings growth that they're putting up and putting it up unapologetically and raising their guidance. GM raised fiscal year 2024 guidance because when you beat earnings estimates by about $4 billion, you're going to start to get a lot of more momentum. Where's Palantir? Is Palantir getting some juice? Where's Palantir? Palantir 43.20. Okay, back at 1%. Robinhood breaking out a little bit at 27. Robinhood's also been consolidating from 26 to 27, and it hasn't really broken out. And I think that's okay. I think it's waiting on the next catalyst, which is earnings, because the broader investor day and the investor summit, Hood Summit, have been good, so it's already run a lot. But I think earnings is going to be the next catalyst for that. Same thing with Palantir. I know Palantir's kind of been stuck in a range from 41 to 43, but now it's waiting on Q3 earnings, and if Q3 earnings are good, then I think it's not going to be too bad. Where's GM right now? GM, I think, is up 8%. GM, yeah, look at that, 7.75%. I mean, look, GM's not Tesla, but GM is up. GM's up what, 38% for the year. I mean, it's pretty incredible. GM stock year to date, 46%. My bad, 46%. I mean, who would have thought GM would be up 46% at the end of a year for a tech market bull rally that's been led by, obviously, technology? They're putting up the numbers. And I think that broad diversification going into assets like GM is great for the broader economy. Microsoft, wow, Microsoft's up 2%. So Microsoft did get an upgrade by Loop Capital to $500. Let's listen to Satya Nadella talking a little bit around AI. Microsoft did introduce an AI agent studio. I've heard the word agent so many times over the past couple of weeks, but it seems like that is the new mechanism to describe what's happening in AI. We'll read the Loop Capital upgrade, but here's Nadella talking a bit more about AI.
The scaling laws as people describe them in AI. It's an empirical law, right? Like Moore's law was also not a physical law. It was just an empirical observation that we talked about it as if it was a law. But it held true. And similarly, the scaling laws basically are showing that every 6 months or so, we now have doubling of capacity. In fact, one of the things that I think a lot about is performance. You can even say tokens per dollar per watt. That's the new sort of currency. And you measure it by that. Every 6 months, we have doubling. And some of it comes because of compute power. A lot of it actually comes from just better techniques around how to use data and algorithms. And so this is something that's inflected, right? You could say this began at the beginning of the DNN era in the early 2010s. But 2018, 2019, with the LLMs and the transformers, they inflected, and it sort of continues.
So basically, Nadella is saying, hey, this revolution around the transformers and particularly LLMs is something that's going to be a foundational element for agents. And Agent Studio is going to be a catalyst that actually allows agents to have a lot more momentum. That's why Loop Capital came out with a buy $500 price target ahead of earnings. They said, we expect solid September results with key growth drivers showing at least modest acceleration during the quarter, likely continuing into year end. Our recent industry checks suggest a modest improvement in the IT spending environment, with potentially stronger spending at the end of the year. Refer to our latest industry spending report on 9/12. Our cloud consumption checks indicate a solid uptake driven by two factors. One is a modest improvement in IT spending, and two is a healthy ramp of workloads from new cloud initiatives started earlier this year. What that means is companies like Perplexity that need to license Azure's AI workloads because Microsoft already has all the GPUs bought from Nvidia to be able to license those workloads. That is what they believe is going to uptick. And that makes sense because I've seen, I mean, you could just go on TechCrunch, which is a sort of tech publication, startup publication. The amount of startups that are raising AI funding is just, it's incredible. And I know we've talked about it a lot on the show, but a lot of these companies are raising money, and that raising of money is going back inevitably to the hyperscalers and to Nvidia. So I think that is where we're going to see Microsoft on cloud hopefully have a little bit of a beat and have some more momentum. Now, someone who is not happy about Microsoft trying to frame themselves as the agent leaders is none other than CEO of Salesforce, Mark Benioff, which quite frankly, to me, is sounding a little desperate. This is what Mark Benioff tweeted yesterday. It was really weird, but this is what he said. Microsoft's rebranding of Copilot as agents, that's panic mode. Let's be real. Copilot's a flop because Microsoft lacks the data, metadata, and enterprise security models to create real corporate intelligence. By the way, I don't think he's necessarily correct on this. I think he's actually very wrong on this. That is why Copilot is inaccurate, spills corporate data, and forces customers to build their own LLMs. Clippy 2.0, anyone? Meanwhile, Agentforce, which is his new rebranding of Salesforce, is transforming businesses now. Agentforce doesn't just handle tasks, it autonomously drives sales, services, marketing, analytics, and commerce with data, LLMs, workflow, and security all integrated into a single customer 360 platform. And then he tweeted a picture of Copilot with a stop sign arrow going through it. He sounds really desperate to me. I think when it comes to competition, you're not supposed to talk about competition, especially if you are in any type of competitive field, unless you're specifically asked about it. And when you're asked about it, you're supposed to humbly respond to the competition. You're not like, even when Karp talks about competition, when they ask about Snowflake, a lot of times he just dismisses it. He doesn't really harp on it, or he just says, hey, they sell steak dinners, we sell solutions, right? It's a very simple one line. All right, we got it. This guy's going on a rant about how Microsoft is Clippy 2.0, Copilots aren't agents, Microsoft lacks the data, metadata, and enterprise security models. By the way, I think that's bullshit. Microsoft does not lack those things. Maybe they're not amazing at implementing those things, but they don't lack the data, metadata, and enterprise security models to create corporate intelligence. Like I think that's just like he's just lying there. So I think when you get something like that, the question now to me around Salesforce is, hey, is Salesforce going to put up the numbers that they need to put up in a meaningful way to prove that Agentforce is real? And here's the hedge against me being a little bearish around Mark Benioff right now is maybe the dude is so confident because he knows those earnings are going to be amazing. Salesforce right here doing pretty well since the last earnings right now at 289. It bottomed at 212. And maybe he knows their numbers are going to be so amazing that he's getting on the offensive And he's not trying to like defend Salesforce. He's trying to put his foot in the ground and say Salesforce is here to stay. We're going to be the AI leader. Microsoft doesn't have anything on us. Maybe that's what's happening right now. But Salesforce has got to grow more than 8%, which is what they're going at right now, to prove that Agentforce is a real deal maker in terms of the amount of volume they're seeing in terms of growth. I don't think that's going to happen as easily, maybe in the next couple quarters. But if they can, then maybe he's, supposed to be talking shit. If not, then it's going to be really weird for him calling out Microsoft and Agentforce not putting up the growth to show that as well. Isn't it true that Microsoft has the best, truest access to enterprise data? Yes, that is correct. Now, maybe that's not always used in the most appropriate of ways. And that's kind of because Microsoft, they make a lot of money off a lot of other stuff, right? There's a reason Microsoft doesn't focus on an ontology and a Foundry-like system, even though they kind of created something like that with Fabric, but it's not really, the juice that Palantir has. They make a lot of money off a lot of other stuff. So, you could argue that Benioff is saying, hey, Microsoft isn't focused on this stuff, whereas Salesforce is only focused on the customer experience, obviously because they're a customer relationship management tool. However, I don't think that's an argument to dismiss the entire agentic workflow that Microsoft is building. You could say it's not going to be, the next $1 trillion opportunity for them because they have so many other opportunities, but I think cloud is like the biggest opportunity for Microsoft. But I don't think it's something that necessarily gets dismissed. So I think Benioff's going to have to put up the numbers. Satya's going to have to put up the numbers. And quite frankly, Alex Karp from Palantir is going to have to put up some numbers to kind of hedge back against the people that are thinking that Salesforce and Microsoft are winning when it comes to enterprise AI. Again, I think we all know what the moat is that Palantir has. Now Palantir can just put up the growth. Like that's really all they have to put up, 30% plus growth. Then I think the market's going to get very, very excited when it comes to what's happening with Palantir. Speaking of Palantir, here is something I want to show you guys that came out this morning around Palantir. And I think it's important to look at this. So AlphaSense is a company that has transcripts that you can like buy from their website with industry experts. And I don't pay for them because a lot of times they just like tweet some of the most important stuff. But if you're interested, that's kind of a service that exists to get broader insights. Here's a cloud migration specialist sharing his view on Palantir and the AI market. I'm going to put this in the chat. You can read the full transcript. I'm not going to read it, but I'm going to read the highlights of that transcript. And then we'll go further from there. So a couple things. He believes Palantir has been at the forefront since they launched AIP. He thinks a significant advantage of Palantir is the security, as they have FedRAMP security for data sets, which is the highest level of security, particularly for government clients. This is especially a significant benefit for clients that have sensitive data sets. Also, FedRAMP is important for other startups that want to get access to security workloads and security confidential sort of ecosystems that Palantir has. We've seen a couple of startups sign up with them over the past couple of months. I think that's going to continue to increase. Second, he says experience with Palantir is positive from their product roadmap and talent. He views Palantir's boot camps as a good strategic move as you want to fail fast and learn fast if you're a client. Fifth, he thinks Palantir will continue to grow fast, but the most significant risk in his view for them is retaining their talent and continuing to have high hands-on client service even as they grow, meaning he thinks growth is not a concern. He thinks the broader concern is just making sure their talent stays with them, which means, you're going to have to deal with some more stock-based compensation, but that's okay if they have the growth. And then finally, he says when it comes to AI adoption in general, he thinks we're in the infancy stage. Currently, 80 to 90% of companies are just trying to figure out what it means and where they can use AI. He believes that right now, 84% of initial AI projects fail. That final bullet point is an argument for Salesforce, Microsoft, SAP, which had great earnings. They're up 5% after their earnings, and Palantir all winning in this broader race for AI simply because there is so much demand for digitally transforming your enterprise with AI. And in order to effectively transform that enterprise with AI, you need something like an ontology. You need something that has securitized LLMs and a meaningful foundational element to actually build the agentic workflows that Microsoft and Salesforce are talking about. Like all these companies and governments need all of this stuff. And all of that business is not going to go to Palantir. All of it's not going to go to Microsoft. All of it's not going to Salesforce. It's going to be diverse. And I think the broader market, SoFi right here, 1049, is betting that if that TAM truly is that large, then Palantir at 95 billion, although people think it's crazy, is justified because they're going to grow into it. And Q3 earnings, we just need to see if that continues to maintain when it comes to the growth story. Palantir is not Salesforce, and it cannot replace Salesforce as of yet, not at the moment, 100%. And I don't think Palantir is trying to become Salesforce. I don't think they're trying to become Microsoft. I think they're trying to become the operating system for an enterprise, which includes customer relationship management, but also includes a host of other things. And now the question literally is just, can they prove after a massive run post S&P inclusion that the growth they're putting up can justify those multiples. And again, I don't think it has to be 40 to 50% growth. I think it literally has to be 30%. That is the baseline. And if it's anything above 30%, I think the street's going to be excited because the street's finally going to believe that there is a broader momentum happening with the tailwind of the AI trajectory that Palantir is on. Mike Gallagher, I think, was on CNBC this morning. Here's a 40-second clip of him talking about Palantir. And let's see what he had to say as well.
But I think it gets to this broader issue where our entire defense industrial base or manufacturing base has been eroded ever since we let China accede to the WTO. In 1999, I think 4 of the top 10 American companies were manufacturing companies. Now none of the top 10 are. I think SpaceX is number 11. That's the closest thing. We need an industrial renaissance here in America. And particularly to do that, we need to leverage what is our asymmetric advantage. That's the weapons grade software that we can produce. We can create a digital twin of all of our factories, from the factory to the foxhole. We can map it. We can get more efficient. We can innovate. That's sort of what SpaceX has done in many cases effectively. And that's what Palantir is doing on a daily basis.
I think he's right about that. And I think warp speed is another catalyst that we're not talking about too much because we haven't got that much information of it from Palantir. But I think American manufacturing, it is time for that to come back rapidly. And as it comes back, I think we're going to see a lot more momentum from companies that are embracing what Palantir's solutions are. And look, SpaceX, by the way, we weren't live to cover that SpaceX event, but I'm pretty sure some people got emotional watching. I definitely got emotional seeing the chopsticks capture the rocket booster. I mean, it was just incredible to see that happen. That is only because of an emphasis and a focus on American manufacturing and a belief that we can optimize and be better than our competitors. And I think SpaceX and Palantir are at the forefront of doing that. And if Palantir can really scale that to the American industrial base, that is something alone that should be growing 40, 50% a year in terms of that business vertical outside of their other businesses, outside of healthcare, energy, et cetera, defense. Now it's just a question of them putting up the numbers. And if they put up the numbers, I think it's going to be very, very exciting. Sunday says the only problem with Palantir's expectations are so high at the moment with all these new YouTube streams pumping unrealistic price targets. I agree. I do think as the media attention is compounding aggressively, and that's a good thing. However, there is a lot of random YouTubers just saying, oh, Palantir is going to go to the moon. I think that is not the best thing in the world. However, if they put up the growth, I think a lot of that stuff doesn't matter. And so the only question to me now is going to be, can they put up the growth? And we're going to find out in 2 weeks. And I'm pretty confident they're going to put up the growth. I'm not worried about like selling covered calls before earnings, selling some Palantir before earnings. Could we have a 10% drop on earnings? Sure. Just because we ran up 150% and like, yeah, you can take a 10% drop. If that's the case, that would be a decent dip if earnings are well. So to me, it's like, it's not any fear going into earnings. I don't think we get a 40% decline. I made it very public that I don't think this is Tesla in October 2021. And if it is, and we go to $22, then I'll be wrong. I will happily be wrong and I'll buy that dip. But if that's just like a macro reason to go down, but if it's not Tesla in 2021, then that means that 37, where most institutions were buying, I think that is a bit of a floor to the stock. And the question is just going to be, if that floor can continue to play out. Amit, can you explain ontology like I am a 5-year-old? So Chad and I are still going to come out with a podcast. Chad is one of the employees at Palantir that does exactly this, explain ontology like you're a 5-year-old. But at its core, you have a lot of unstructured data in a business. You need to structure that data. And to structure that data takes a lot of hard work, takes a lot of technology, takes a lot of patents that Palantir has, and ultimately takes a lot of grunt work, which is where the consulting element of Palantir comes in, right? You have a lot of forward deployed engineers actually matching that data to make sense of it in a way that allows your business to understand what to do with the ontology, which the philosophical definition of that is the state of being of your business. So if you're an energy company, you're an oil company, and you have millions and millions of petabytes of data coming from all these different angles around drilling, manufacturing, servicing, marketing, sales, finance, et cetera, putting that all together into one ecosystem and then being able to derive insights from that. It sounds simple, but it's very difficult. Companies have tried to do this. Most companies have failed. This is why Palantir is locking in 5 to 10 year contracts with companies, because once it works, and it's really hard to get it to work. And if that's the case, that's where you can derive a lot of value. On top of that, the LLMs that everyone is talking about, they have zero value unless they're connected to your actual data in an enterprise. So what Palantir's real argument is to the broader market is, hey, let's take these LLMs that you guys are getting so obsessed about because they can do things in an automated way, and let's attach them to your business results, your business intelligence, the actual state of being of the organization. And when you do both of those things together, you get some pretty interesting results. All right, here's Paul Tudor Jones, billionaire investor, on the state of the economy and the election. Let's hear what he has to say, and then we'll keep going from there.
Okay. Because that's how the money is going to get raised,
Correct.
one way or the other.
Correct.
I think we have a screen, if we could, that puts up a little bit of a menu here.
Yes.
Of, I don't know if it's options. Actually, they may not be options
No,
at all.
there are plenty of options. There are plenty of
But
options.
there's not many ways to get where you need to go unless you start to do some of these things.
Correct.
Maybe. So the question is, of what's on the screen, you can let the tax cuts expire. That
Well,
gets you
look, can I just say
billion.
this?
Yep.
You have to let the tax cuts expire.
You have to.
Yeah, you have to let those expire. That's 390 billion. We're going to have, again, we're gonna be broke really quickly unless we get serious about dealing with our spending issues, and unless we can either. I don't know if we'll be able to cut spending that much. 60% of our spending are transfer payments.
But if you think we're going broke, and you think Trump is going to be the president, he's not going to let those tax cuts expire if he can avoid it.
The thing
he does not want the corporate tax rate to go to 25%, as you're suggesting it'll have to. He's suggesting it should go to 15%.
I'm saying that just to get us to the point where we stabilize debt to GDP at where it is right now, here's what you need to do. You need to let the Trump tax cuts expire. That's $390 billion. You need to raise the payroll tax on every single working person, 1%. That's another big slug. You need to.
What do you think that does to jobs?
We're clearly going to have a period of contraction, which hopefully, that's why I was going to say, it's going to be really important.
AKA a recession, either in 2025 or 2026. That it looks like that's what he's projecting.
For the Fed to be able to offset the fiscal contraction area that's going to come.
Then you want to increase the individual tax rate all the way to the top rate of close to 50%.
Now, hold it.
Yep.
I don't want to do any of this stuff. What I'm telling you is that we've got to be serious about where we are fiscally. And so I'm giving you, there's a whole set of options, right? We could go in and cut 25%.
But he wants individuals to pay 50%. Increase individual tax rate on top 4 tiers by 10%, top rate to 50%. Okay, so basically if you're making more than $400,000 in America, you'd be paying 50% of that in tax. That's because right now I think it's 37%. So that's okay. Interesting.
5% of the federal workforce. Some people may do that. There's a website where you can go look and play with all the options. You can raise the capital gains rate from 21 to 28%. That only gets you $10 billion a year. It actually doesn't get you what you need. So I'm simply showing some of the things that you can do. Yes, you'd have to raise the tax rate on the top, I think probably everyone over 200 grand, probably have to raise that to 49.5%. If you do all these things, raise the Social Security from 65 to 70. If you do all these things, means test, Medicare, if you do all these things, all you do is you get to a primary balance. What that means is you stabilize debt to GDP. You're still actually increasing your debt.
Right.
You're still actually increasing it because it excludes the interest costs, which, oh, by the way, the interest bill this year is larger than every single line item except Social Security. It's larger than defense spending, larger than Medicare.
I want to talk about why you're here, which is Robinhood and this conference. But before I do that, is this, given all of the things you're saying, are you off buying gold and Bitcoin and
I think all roads lead to inflation. We're going to end up,
but does all roads lead to inflation? Therefore, gold is a good investment. Is Bitcoin a good investment to you?
I'm long gold. I'm long Bitcoin. I think commodities are so ridiculously underowned. So I'm long commodities.
Silver. That's another argument for silver. Again, if you think you're going to have a little bit less performance in the equity markets, then silver, gold, those should outperform in 2025.
I think most young people find their inflation hedges via the NASDAQ. That's also been great. It's probably some combination. I probably have some basket of gold, Bitcoin, commodities, and NASDAQ, something like that. And I would own zero fixed income. If I had my cash, it'd be very short term. The playbook to get out of this, you see it in Japan right now. They have 2% inflation, 30 basis points overnight. They don't want to raise rates. The playbook to get out of this is that you inflate your way out and you have a small tax on the consumer and you run interest rates and nominal growth rate, interest rates below inflation and nominal growth above inflation. And that's how you reduce your debt to GDP. So you're going to have the Fed they should be easy. They should be
easy. You want them to cut.
So just real quickly, every 100 basis points, given where our debt to GDP right now, every 100 basis points is worth about $90 billion a year to the deficit. $90 billion. So yes, if we're trying to stabilize debt to GDP, we want to run the most dovish monetary policy that we can without letting inflation become too much of a tax on the citizenry. So yes, all roads lead to inflation. That's historically the way every civilization has gotten out, is they've inflated away their debts.
I have to do a bit more research on that argument. Every country has inflated away their debt to get out of debt. If Paul Tudor Jones says something like that, it deserves a little bit more research and understanding of what he's saying. I don't know if I fully agree that the best way to get rid of our debt is to inflate it away. It's a hell of an argument he's making, though. Jacob says grow GDP faster than inflation. Simple as that. I mean, his broader argument is we need to allow inflation to occur as long as GDP can outpace it dramatically. And one of the ways to do that has been, I guess, to raise taxes on ordinary folks. Look, I think a lot of you in the chat kind of take an opposite view, which I agree with as well, which is we need to cut spending. The problem is, and this is where I have to even catch myself, even though I'm a proponent of like, yeah, we got to cut government spending. What do we cut, right? Like what actually do we cut in a meaningful way? Now, there's some obvious things that are probably important to cut, but it gets so political when you think about cutting those things that I think everyone kind of gets to a stalemate in terms of what do we cut? Do we cut foreign spending? Do we cut the Department of Education? Right? What exactly do we cut? Logistics spending, infrastructure spending? What exactly does the government need to cut? Are there things we need to cut? 100%. Do we cut welfare spending? Like there are so many avenues that the United States government could spend less money on, and that could be obviously very beneficial to the broader economy. And it could help us reduce the deficit. But the question becomes, what do we cut? And politically, forget what do we want to cut. What can we politically get passed through Congress that allows itself to be cut in a way that Republicans and Democrats can both agree on cut? Like Democrats want to probably cut certain elements of immigration spending, whereas Republicans want to increase that. Republicans want to cut some of the aid we gave to Israel and Ukraine. Democrats want to increase that. Like it's just such a dicey situation on how we actually figure out what the hell do we cut when it comes to spending, which is why I think Paul Tudor Jones is saying, you know what, you guys love talking about cutting spending, but it's probably not going to happen. So we have to raise money another way, whether that's through GDP growth or taxes. And I think that's kind of where he ultimately is getting his thesis that we just listened to from what he said right now. Rango says, forget about cutting spending. Let's start with not increasing it. Well, that's another good argument. SoFi, by the way, above 1050 right here, 1051. It is kind of crazy though, bro, because we've been having this debate since 2023 when inflation really started ramping up, or 2022, which is like, is the debt, does it even matter, right? The US debt, like if we have it, is it okay? If our military is the best, does it kind of balance out the fact that we have so much debt? And I think more and more economists are starting to say this chicken's going to come home to roost eventually. And because the stock market has outpaced inflation by a matter of 7x over the past 2 years, that's obviously, people don't feel the brunt of it. But when they start feeling it, and when, you know, your house is not worth as much or the market's not doing as well, and you have a little bit more less growth, you're going to, and deficit spending is going to go up, then it's going to be a question of what do we do about it? You know, how are we going to solve those situations? And right now, I don't think anyone has the best answer. I don't think Trump or Kamala has an answer to it. I think they're both promising whatever the hell they can promise to get elected. And once they get elected, they'll try to figure something out. But I think on the campaign trail, they both don't have an answer. And I don't think anyone really has an effective answer to deal with this right now. Now, well, Trump does have one answer, which is Elon becoming the head of the government efficiency thing that was going to cut expenses. I mean, dude, if there's a world where Trump gets elected and Elon gets a cabinet position where he legitimately cuts the government workforce like he cut with Twitter, that's going to be crazy. And maybe it's not a reduction in workforce. Maybe it's a reduction in like spending, which inevitably will devolve into some reduction of workforce. But maybe it's not maybe it's not 80% of the government gets fired, but maybe it's 80% of the spending starts to get reallocated, or at least starts to get cut. That would be quite incredible. And if somehow Elon does this. What he does to the government will do with Twitter. If he somehow does this, which is going to be hard to see that happening, just because I don't know if the swamp will let him do that. But if he does that, we've got to admit Elon is the greatest of all time, dude. Not only is he having chopsticks catch rockets, not only is he going to make FSD real, not only is Optimus, like if he fixes the US government spending problem without having to be the president, I mean, dude, it's going to be the craziest thing in the world. Granted, I think it's going to be hard. I think it's going to be hard for him to do that. But we'll see. We'll see if that ends up playing out. What else do we have? Over 1/2 of American workers are government workers. So that's another reason it's going to be hard, dude. There's a lot of people that work in the government. And so if Elon cuts this somehow, it's going to have to be a way that doesn't cut workers, but cuts the spending. But the question becomes, if we cut the spending, we might not have a need for the workers. So I don't know. But then you have other stuff where, like the IRS, right? Do they need 80,000 agents? Probably not. And I think that's some of the stuff Elon's going after. I don't think it's literally everyone in the government, but there's a lot of those different kind of arguments, I think, that Elon's thinking about in regards to making the government a little bit better. And that idea, then the question is, where do we get the money from? For the people that hate Elon, hate his whole idea of cutting spending, where the hell do we raise the money from, or where do we cut the spending from? It has to happen at one point, and it's going to be dramatic either way. So the question is, which way is it going to be? Here's GM CFO. Let's get his thoughts on Q3 earnings. GM is up 7% right now. Let's see what they have to say about the broader car market and China.
General Motors CFO Paul Jacobson on a morning where GM beats on the top and the bottom line by a wide margin. Paul, I'm looking at the numbers, and it's pretty clear that the strength, it's not entirely because of it, but a good chunk of the reason why you've done so well is the strength of your internal combustion engine business. How have you been able to maintain your pricing that we saw the strength of in the third quarter?
Well, good morning, Phil, and thanks for having us today. It's really a tribute to the men and women of General Motors, from design to engineering to manufacturing to administration. It's really a team effort, but it starts with the quality of the products that we have. We've been in a refresh cycle that I think has kept us ahead of most of our competitors, and you've seen that not just in pricing but in market share and demand for our vehicles. And it's a fun momentum to be a part of.
While you were strong in the U.S., you had another quarter where you struggled in China, a big loss, $137 million. And I think a lot of people look at what's happening in China where you've lost a lot of market share, and they say, is it because the Chinese brands are more aggressive, or is it because the Chinese consumer is just turning away from Western automakers like General Motors?
Real quick, guys, Peloton has just partnered with Costco to sell a discounted bike. Peloton stock is down 2%. Costco is up 0.03%. Peloton teaming up with Costco to sell its bike in 300 stores for $2,000, which is a bit of a discount from what it usually is. Okay, there you go. Peloton and Costco. That is a collaboration announced just now.
Well, we knew coming into the year that China was going to be a problem for us. We had a lot of inventory with our joint venture partner. The good news is our retail sales actually picked up in the third quarter, and we've been able to work down that inventory. We're about 50% of where we were at the beginning of the year. So we're making real progress, and we've got a number of meetings with our partner in the fourth quarter. We've talked about needing to make changes to the business, bringing costs down to be competitive in the new market that's there. And we think that we can turn it around.
But to get back to my original question, what's the reason for the loss in share? Is it ultimately the aggressiveness of the Chinese automakers, or is it the Chinese consumer turning away from Western brands, Western automakers like GM?
Well, that's been something that's been going on for a couple of years now, as the Chinese consumer has really migrated to new energy vehicles across the board. But when you look at our portfolio, we've got a lot of ICE vehicles over there. We do have a number of good EVs with our partnership with SGM Wuling and the Hongguang Mini EV and others like that. We're also bringing in some premium imports. So while the market has shifted there, there's still a pretty sizable market for us. I think we had just gotten into a point where we had pretty sizable inventory builds that were really causing pricing issues for us, et cetera. So we think that we can adjust the business and work. It might be smaller than it was historically, but something that we can put together and be successful there.
So the interesting thing about GM losing a little bit of market share in China is Tesla, I believe, continues to increase their market share, although slightly in China. They had their Tesla insurance numbers 2 weeks ago in China were the highest they've had in the past couple of years. Or I think it's ever, like the highest they've had ever in terms of Tesla registrations in China for the end of Q3. So you're starting to see a little bit of the Chinese consumer maybe reject some of the more American brands outside of Tesla, because Tesla isn't really seen as an American brand. It's seen as this like global brand that's just like really cool. And if that's the case, hopefully that's a tailwind for Tesla, even though GM stock right now is up 8% on these earnings. GM right now is still up 7.6%. Robinhood 2704, Bitcoin 67,000, Oklo down about 12% of the day. SoFi right below 1050 again. 1050 is a little bit of a wall right here on SoFi. SoFi 1045, Tesla 216, HIMS is at 2319, Rivian's at 1011, Netflix at 766, Lucid at 260 or $2.60, TSM at 198, and Nvidia is down on the day, but still into the 140s at 142.7. Celsius dumping. Okay, so Celsius, very interesting one. A lot of people have been saying this is officially bottomed. It did have a run last week up to like 34, 35, now back down to 31, down 4% on the day. Their earnings are going to be very important. I don't have the date on when they have earnings, but I think it's coming up pretty soon. And if you see, less growth momentum already that the market is priced in, which means it has to be worse than what the market's pricing in, I think we're heading to 25. If it's just stable, I think we stay at 31. If it's a little bit better than expected, you probably get into that 34, 35 range that I was able to get into last week. Not buying Celsius for me personally. I don't love the thesis in general long-term. I think as a swing trade, it's a fine trade if you can nail the bottom. But energy drinks are just not that exciting. And the growth, which was the only thing that made Celsius exciting, is also not that exciting anymore. So I think there's other opportunities. However, in a market that's filled with a ton of, you could call it frothiness, Celsius is one of those names that is down a decent amount. Dylan says, amid Celsius selling buy two, get one free at the local gas station. Interesting. Okay, so you might have some excess inventory as well that they're trying to get off as well. Okay, let's talk about some other headlines that are going on. So OpenAI, remember we had that whole deal about the OpenAI CTO leaving the company after raising a $150 billion valuation? Well, she's starting a startup. This is getting a bit ridiculous. Mira Murati, who was the OpenAI CTO, is now building an AI startup focused on proprietary models and looking to raise about $100 million in a seed funding round. Why is this ridiculous to me? Two reasons. Number one, something is wrong with Sam Altman. I just don't understand how you leave a $150 billion startup, which is what it's OpenAI is still a startup that you're probably going to get equity in, unless you think something's wrong with Sam Altman. Because the odds of winning in AI are so hard because the barrier to entry is so expensive because you have to buy so many GPUs, that $100 million is not going to do much in regards to a seed funding round. And number two, she was the CTO. I mean, like the CT freaking O of OpenAI. Who leaves that to start a startup? Like that just doesn't make sense to me unless she's so ambitious that she wants to chase her own destiny by becoming the CEO, which is just kind of ridiculous, dude. Like the CTO, CEO, kind of interchangeable in regards to a startup. You're just doing everything all at once. Maybe she's not getting all the praise that Sam Altman's getting, but still, like she's a very important person. Leaving makes no sense outside of the fact that there was an issue with Sam. The other reason this is a bit concerning is because did she not get equity? We know Sam Altman got like 7% and he's worth $10 billion now. Did they not give her enough equity? And she felt like, well, what's the point of being CTO if I don't get a meaningful equity stake? Maybe that was a concern, which then speaks to Sam Altman's leadership of not giving your CTO enough equity for her to feel, which means, maybe she was fired. And she said she quit, but she ended up being fired. The final reason this is concerning to me is because if she is legitimately starting another startup for AI, my question, the same thing with Ilya, who is the other co-founder of OpenAI, who left to start a company called Super Safe Intelligence and raised $1 billion, is what the hell are these guys building that OpenAI is not building? Like the press release said they're building like new models. It's like, well, OpenAI is building the biggest model. Like, are they better models? And if they're better models that are quote unquote more safe, how much money do you have to spend to make them more safe? Like there's so many questions I have that it just sounds ridiculous to see all these AI companies pop up when in reality, all of them devolve back into LLMs and those LLMs ultimately need to be valuable. And already the LLMs are being commoditized. So what really is the value? It's just very, very, very confusing to kind of see where the demand is coming from. But and that also makes me feel, is it a little bit of a bubble that's forming with all these companies starting AI startups, or is the demand just that expansive that you can have multiple AI LLM startup companies outside of OpenAI and they can still do well? I don't know. But that is one of the updates we have from OpenAI, and I guess we're going to see kind of where their route ultimately tries to go. Amit, if one day we noticed that electricity was invented, wouldn't you go build a business? Yeah, but if someone built most of the electricity and I'm not using the electricity for something, I'm trying to, like, if someone builds the light bulb and instead of building a business that uses the light bulb, I want to build another version of the light bulb, I don't think I want to get into that business. I would want to build a business that uses the light bulb, but from what I read on Ilya's new startup and Mira's new startup, they are trying to build another light bulb. They are trying to build another proprietary model, which makes no freaking sense because OpenAI has spent like $10 billion building ChatGPT. They're not going to get that type of money. So that's the part where I'm very confused. It's like, are you using the models to build something? Which in that case, how exciting is your startup going to be if it's just a ChatGPT wrapper? Or are you building something to compete with ChatGPT, which makes no sense to me because you're not going to compete with ChatGPT without billions. And so that's the broader concern I have about this going on right now. They're definitely not building something like Pound. Like, we know that's not happening. So I think both of these things are the biggest concern I have right now when it comes to AI. Let's get an update on Lockheed Martin. Massive beat on their earnings. And let's see what they had to say as well.
Over to Morgan Brennan. She's got a look at Lockheed Martin's results. Morgan?
Good morning, Becky. Well, Lockheed Martin reporting a big earnings beat, $6.80 per share, but revenue of $17.1 billion. That was missing the mark. The defense contractor is impacted by a lack of funding for the next production lots of F-35 fighter jets as it negotiates lots 18 and 19 with the Defense Department. Now, that's expected to be resolved this quarter, according to CFO Jay Malave. Lockheed again raising guidance for full year 2024 sales, segment operating profit, EPS, free cash flow, raising the dividend, raising the stock buyback. The maker of Blackhawks and satellites posting a record $166 billion backlog. This was led by missiles and fire control. Book-to-bill in that segment was 2.7, which is very strong. Lockheed CFO Malave telling me demand is, quote, very, very strong, pointing to GMLRS. These are the artillery rockets that are used in Ukraine, and JASSM and LRASM cruise missiles, which are produced for the Air Force and the Navy. Lockheed also makes that powerful THAAD missile defense system, which is what the U.S. is supplying to Israel along with troops. Malave noting that that's already in Israel. On election and defense spending, which is currently set to grow 1% due to budget caps, Malave saying, quote, our base forecast going forward is that there really aren't more supplementals. So to the extent that there are, that would represent upside to the growth framework that we're going to lay out. Now, management's going to lay out that multi-year strategy. This is 2025 through 2027 on the 11 a.m. Eastern conference call. Guys, shares of Lockheed Martin, it looks like unchanged right now, but the stock is trading right near all-time highs. It's not just Lockheed that's seeing the strong defense demand either, guys. RTX's Raytheon defense backlog surged last quarter. Defense remains strong at GE Aerospace as well. I know you guys were just having this conversation with Rep Gallagher of Palantir, too. Back over to you.
Lockheed's crushing it, bro. Lockheed is crushing it. Again, they're down a little bit on today, but defense spend just seems to go higher. That is bullish for Palantir. That is bullish for the broader software products that are going to need to arm a lot of these missiles and weapon systems that are being deployed. Robinhood right here, 27.14. Bitcoin, 67.545. The question to me becomes, will defense spending continue to be as high as it's been in 2022 with the bulk of that going to Lockheed and Raytheon next year? And you got GM right here creeping up at 8% up on the day. If it is, then although these stocks are up and they've had the best year they've had in decades, it doesn't seem like that momentum is necessarily going to slow down. But again, it depends on also the geopolitical state of the world in 2025. And I think for everybody, we hope that that geopolitical state gets better. Wouldn't be the best for Lockheed or Raytheon, but that's okay. You know, you want the broader world to not be in disarray. And 2025 is going to be really interesting, dude. I mean, 2025, we still have Israel and the Middle East tensions. We have Russia, Ukraine that hasn't really been resolved. Obviously, the new presidential administration is going to determine the trajectory of both of those conflicts. And then you've got China. I don't know if you guys saw this headline 2 days ago, but they have begun preparing more drills around Taiwan with their military. Nothing too dramatic, but again, they're preparing for a potential escalation. Is that escalation going to happen or not? Hopefully not. And China's economy is not on the point where they could afford that escalation. I mean, they can barely stimulate their economy enough to get investors excited right now. So there's a lot of stuff going on with China. But if you see more turmoil in 2025, Alibaba now going green on the day, the question is going to be, do these defense stocks continue to catch a bit from all that? Why not Hood Legend instead of Webull? So first of all, I'm still learning how to use Robinhood Legend, which is why I'm not using it right now. Honestly, guys, I haven't had a chance to really play with it. I played with it for like a couple hours. And I slept all day yesterday. So it'll take me a week or two to get used to it. Number two, the UI in terms of actually looking at stocks on the side of your screen versus the chart is not the best for streaming. In fact, if I pulled it up, you guys would have to kind of squint to see some of the tickers. So that's one of the things I think they need to improve a little bit. Palantir right here at 43. But we will be using it a lot more for charting because the charting is just phenomenal. I mean, just like even the zooming in and out, the drawing of the lines, it's starting to feel like a more legit platform. I'm going to start using it more on a daily basis, just like looking at my own portfolio and navigating it, all that stuff. But in terms of streaming, we're going to have to see how we can use it a lot more on the stream. Uber at 81, Rock Lab at 11, Q's at 495, MicroStrategy at 220. Oh, let's listen to Saylor. So let's see what Saylor had to say a couple of days ago. He wants you to short MicroStrategy. This was the most OG boss thing you could say, because basically he said when you short MicroStrategy, more people make money from squeezing the shorts, which was just funny to hear him kind of intellectually talk about the options market around MicroStrategy.
My real aspiration now is, if you really hate Bitcoin, I want you to love us. Like, we're the perfect instrument to short. Right? Because I promise you I won't sell it. Right? We're going to be levered long Bitcoin. And if you don't like it, or if you just want to hedge it, you get to sell our stock or sell puts or buy puts, right? And the worst thing I could do is to take your side of the trade or to interfere with what you're doing. So I think part of MicroStrategy's rise to prominence in the space is we have been laser-like focused. We're very consistent. We're very transparent. We're going to buy Bitcoin, never sell Bitcoin. We're going to borrow money intelligently. If you like Manhattan, and if a company said, I'm going to borrow $5 billion at 1% interest, and I'm going to develop real estate in Manhattan, you might think that that's the kind of company you would like to invest in. But if you hate Manhattan, and we're 150% exposed to Manhattan, you got this investment thesis, like, that's the company I want to short. And the most important point in the marketplace is you just have to be very pure, true to your focus, have integrity and consistency and transparency, because it's not my job to trade, hedge, arbitrage, or construct that portfolio. There are guys with hundreds of millions or billions of dollars in a Bloomberg, and that's what they do every day. So my contract with them is, we're going to do what you can't do. We're going to buy Bitcoin, hold Bitcoin, and we're going to issue equity, and we're going to issue debt instruments, and you can't do that. We're a public company, and on the NASDAQ stock exchange in America with a nearly 30-year track record, and we have 16 billion of permanent capital. That's Bitcoin, right? So I can create an equity with 80 or 90 vol. I can have permanent capital. We can stand massive swings because of our capital structure. That's what we can do. What you can do is decide if you want to buy it, sell it, hedge it.
I really like that answer. It was really interesting. Artist here says this is not business or economic development. It's just horseshit gambling and financial engineering guaranteed to blow up. So that's one perspective, that Saylor buying Bitcoin and issuing convertible debt and collateralizing MicroStrategy stock, which inevitably collateralizes the convertible debt that turns into more shares of MicroStrategy stock to be able to buy even more Bitcoin, is a Ponzi scheme. That is a very fair assessment of the situation. The other assessment is, if Bitcoin keeps going, it keeps going up, then all of those shares he issued at, call it $50, now that MicroStrategy is 200, those shares are going to be good, and the debt holders are going to get their debt that they issue to MicroStrategy to buy the Bitcoin in shares. They'll be happy because, their shares are up like 400%. And this thing can just keep going on and on and on and on. So is it a game of musical chairs? Probably. Is it a game of musical chairs that has this big asset class that is capturing the world's attention called Bitcoin? Yes. And is it a chair? Is it a game of musical chairs that people can sell puts, buy calls, sell calls against, and be able to use MicroStrategy stock as a trading instrument to be able to capture tons of premium in the short term? Absolutely. The question becomes, does it all blow up and go to shit? And I think it's really contingent on Bitcoin, dude. If we get another 2022 where Bitcoin falls to like 20,000, yeah, MicroStrategy blows up. And I don't know if they have the liquidity to withstand that. I think they'll probably have some debt issuers willing to like give them cheap debt even to buy the dips at those moments. But it is all going to be a question of Bitcoin. And so for those that are in Bitcoin, that is going to be the big question. And if it keeps going up, I think the game can keep continuing when it comes to MicroStrategy. The one thing that is good about him is he did say he's never going to sell, right? And I do believe him. I personally believe. I think Saylor's convinced MicroStrategy right here, 220, that he's never going to sell. But he did say he's going to be buying the top forever. I think he's correct about that, and he's ready to be a long-term bull on Bitcoin forever. So you can bet on him not selling. The question is, will you bet on Bitcoin not ripping your puts or your shorts off? I mean, it's hard to make that bet if Bitcoin goes nuclear. But if Bitcoin stays flat, then maybe those bets are a lot more lucrative. Bitcoin right here, 67,500 right now. Oklo now down 9% of the day. SoFi 1044. Someone said, Amit, do you think SoFi is under or overvalued if we don't get another rate cut? No, I don't think so. I think I along with the uncertainty of the election, I think it's not about the election. It's not about the rate cut. I think it's literally about Q4 guidance. And if they can smash Q4 guidance, we know they're going to triple beat. I think SoFi is going to do well. SoFi has been holding its gains. Most of the time, SoFi goes up and then it gives it away, especially after earnings. That's not the case this time. And I think it's because the shorts are legitimately getting a little scared about what's happening. And the more they get scared, the better we're going to have in terms of momentum for SoFi to do well. And for those shorts to cover, which is about 180 million of those shorts. So I think we will see more momentum. And, I think we get at least one rate cut for the year, which is good. But really, guidance is going to be the big thing that happens for SoFi. What happens to the market if years from now Bitcoin is 1 million or more and gets hacked? That's a good question. I don't know. If Bitcoin is $1 million a coin and it gets hacked, which I think it's possible for it to get hacked, right? But the probability is low, but it could get hacked. I don't know. I mean, I don't know. I guess, maybe Bitcoin collapses to 500,000. I don't know. I think to get to that 1 million is going to be the journey of our lifetimes to see if that happens. And maybe when we're all 80, 90 years old, we see Bitcoin at 1 million, or maybe we see it in 5 years. Like it's just so unpredictable. And, but again, that unpredictability and that volatility is what makes a market. And that's why MicroStrategy stock is so lucrative to people on the downside or the upside, because they feel there's an opportunity to enter into that options market, which is why Saylor says, hey, I like if you short us because it makes the premiums higher. And if the premiums go higher and his thesis plays out, then the shorts get ripped, the bulls make money, and they make way more money than they would make in a regular stock, because the regular stocks aren't shorted the way MicroStrategy is, and they don't have the alpha to a volatile asset like Bitcoin the way MicroStrategy does, which is why Saylor is excited overall about that ecosystem. That's what makes Vegas as well. That's correct, Martin. That's also what makes Vegas as well. How do you think the U.S. government got all that Bitcoin? That's a good point. That's a good point, Lunar. That's a good point. 25 basis points is guaranteed, so SoFi forward guidance will be great. Yeah, I mean, look, I think it's guaranteed. I know the broader market's starting to feel a little scared about if we're getting a rate cut because the economy's doing well. But look, banks are going to do well in 2025 because rates are going to come down. I know a lot of people have probably seen this chart of bank losses being the most they've been since 2008. Let me pull up that chart right now. That chart is a lot of fear mongering, in my opinion. There's like people that are saying, well, the bank losses are at the highest level since 2008. Yeah, but they've been at the highest levels for a long time. I mean, that's not something new, right? So this is the chart right here. Bank losses on unrealized held to maturity securities are 7x higher than the 2008 financial crisis. Every individual rate cut of 25 bips decreases these losses. And so that's why the banks, even though their net interest income goes down when rates come down, their AOCI losses go down as well. So they balance that with the lack of losses on their loan books, which is also really important for share buybacks and dividends, which is what they've been doing more of, a lot more of. So SoFi, even if it's just a bank at the end of the day, even though it's growing way faster than the other banks, they don't have a ton of losses like JP Morgan or Bank of America, but they will have a macro tailwind of more lending and rates coming down, which I don't think is going to stop. And so, my spreads are from $7 going to $20, and my 3,500 becomes 50K. It sounds kind of crazy thinking it would actually go to 20, but like if it has a violent outbreak, the way we've seen other stocks from a 2 to 3 year base, could it go to $20? Maybe. We do know Noto gets those hundreds of millions of performance stock options in 2026 if it gets to like $25. So you got to get to 20 before you get to 25. Maybe there's a shot that happens, but we're going to have to see. We're going to really have to see if the shorts are done with SoFi and if the guidance can live up to the momentum that Noto thinks they can have with more rate cuts. Uber right here at 81, Rock Lab up a little bit, 1131. Someone asked, what do I think about Robinhood earnings? I think they're going to crush it. I think they're going to grow more than 40%. And I think the stock's heading closer to $35. Those are my thoughts. Now, I do think on the earnings itself, Robinhood's going to be not moving because every earnings Robinhood is flat. And then after a couple of days, the market like looks at the numbers and they get excited about it. So given the earnings is right before the election and historically Robinhood is down 1 or 2% on the earnings, even if they have really good numbers, I don't expect any big move, but I expect going into the end of the year after the election is resolved and the broader market tends to continue momentum, then Robinhood gets closer to $30 by the end of the year. And if that happens, that'll be good for Robinhood and obviously good for a lot of the other proxies to the market that are bets that the market can do well. Bitcoin right here, 67,000. Palantir still at 4280. See, this is what I was talking about in the morning. Palantir got all the way to 4330, just like yesterday, now back at 4280. I think it's just being played with right now in terms of the stock. I don't think there's an uptrend or a downtrend. I think it's literally just stable and people are swinging it, buying and selling it for pennies because they know that the move's already happened. Earnings is the big catalyst. It could fall 20%. It could go up 20% on earnings. Everyone's kind of just like waiting and seeing. And so I don't think we're going to get too many $1 a day movements like we got over the past couple of weeks with Palantir until we have earnings. And so that's what we're going to have to see when it comes to Palantir. All right. What else do we have? Is that pretty much most of the market news? I'm pretty sure there's other things I haven't talked about today that I'll try to discuss over the next couple of days. But there's a lot of things that happened over the past 2 weeks. China, we didn't get to talk about China too much. Simple thoughts on China. Look, it's risky. It's always been risky. And the CCP is not stimulating enough for the market to get excited. Moody's right here. Their CEO said we had a record-breaking revenue performance in the third quarter. Again, Moody's is not a company that should be doing horrible or should be doing amazing if we're heading into a recession. And Moody's is doing pretty damn well. So Moody's doing good. In terms of China, again, I didn't go long on China because I was always afraid of the CCP. I'm still afraid of the CCP. Talked to a bunch of people in India, how they think about China. One of the reasons the Nifty 50, which is the India S&P 500, was going down is because a lot of money was going into China. It started rebounding last week because China started going down, and a lot of that money came back into India, into a different emerging market. So I don't know. I think, they announced another like $200 billion of stimulus a couple of days ago. They've got to announce some rapid stimulus for investors to feel that they haven't been rug pulled. And although, China's up a lot from the lows, it's not up enough to get all the new investors that got in at the top, the local top, to be excited about it. And so we're going to need some more momentum. They also passed that stupid tax policy where they're going to tax overseas investments 2 weeks ago, or like, I think it was last Monday. Not a good idea, in my opinion. Like, there's some things they're doing that are just weird. So I think China is a decent trade if you can time it correctly, but if it's an actual investment as an emerging market, I'd rather buy India, which is way more expensive than China, like absurdly more expensive than China, but at least I can trust that, the government is not going to do anything crazy versus in China. Enphase earnings today. Yes, we'll talk about Enphase earnings today after the bell. I think we'll have Jason on, so we'll do Technical Tuesday and we'll get into everything that Jason has to say. And we'll get his thoughts on kind of where these charts are looking at, or where these charts are looking at to be set up over the next few weeks. Dylan says, Amit, when looking at an options contract, when you see a chance of profit percentage, what's a good percentage to see and enter in your opinion? This is a great question. For me, I like doing long dated leap option contracts, which again are hard to buy right now because the broader market has rallied a ton. But honestly, I like getting a 4 to 5x when I'm looking at leap option contracts. Now, when you're buying weeklies, even 40% or 30% is amazing, right? If the underlying goes up 10% and you make 40%, that's an incredible return. But if you're buying leap contracts, if you're not going to buy the stock and if you're going to take the risk of actually buying the leap, I would expect multiples beyond what the stock should appreciate at. And that usually ends up being in the 3, 4, 500% range. But I know some people that bought Robinhood calls when it was $7 for $15 and they're up like 20x, right? So it just really is the question. The question that I'm thinking of going into 2025 is, are there assets in the stock market that we can buy that would result in a 2,000% return, even on the leaps, because they're so undervalued? Like the people who bought $15 Palantir leaps when Palantir was $8 are doing amazingly well. But buying a $70 Palantir leap for 2026, is that really? I mean, Palantir has to go up to 70 and then beyond for that to be a profitable leap. Whereas, when it was 7, it had to go to 15, which was a double. But now it's way above 15, 3x above 15. So it's like the leap has done very well for people. I don't know if 2025 is going to be that year. And I think we need this election to kind of play out for us to really figure out if that year ends up being the way we want it to be. Tesla's falling. Where's Tesla right now? Tesla 215. Yeah, Tesla down about 1.37%. Tesla earnings are going to be interesting as well. Could I see Tesla going to 200? Yes. Could I see it going back to 230? Yes. More likely than not, I think people are betting on 200 over 230. But I mean, let's look at the options right now on Tesla. Let's see. So Tesla 200 puts for October 25th. We have 22,000 of those are open, expiring on Friday. $200 puts. 195 puts, you have 5,000 open. 185 puts, you have 9,000 open. 210, you have 14,000 open. Okay, so let's check the calls. Reasonable call is what? 220, 225, 10,000 open, not bad. 230, you've got 17,000 open, almost exactly the same as the $200 put. And then 220, you have 15,000 call opens. So you've got basically, I would say, a close to 1-to-1 ratio in terms of the amount of puts open versus the amount of calls for October 25th. And so the market's going to split 50-50 on where they think where they think Tesla's going to go. 10:30 a.m. the drop happens. LOL, now go up, babe. Oh yeah, we're way past 10:30. We're 11:45. I didn't even notice. We're at 11:15 now. All right, so let's do some Q&A. That is the end of the market open. Thank you everybody for joining once again. Back from India, back again in the greatest country in the world, America. So if you guys have any questions about India, any thoughts, anything you want to say, we'll do that for the next 20 minutes and then I'll get out of here. You guys can kind of tell my voice is a little raspy. Not because I'm sick. I just haven't talked for 3 hours straight in like 2 weeks. So kind of getting back into the swing of things. Technology also messed up a little bit. I'm missing some plugs. My camera's missing one of the things that it sits on. So it's a little slanted right now. So a bunch of little things I got to fix up to get back into motion. But we're back in America, which is what matters. We're back in this country. Dude, the immigration process going to leave India was so bad. There were like 2 people holding up a line of 500 people. It got to the point where the crowd started yelling. Like it was so bad. People were missing their flights, all this stuff. But finally we got through that. And when we got to America, it took 2 minutes. Show them your passport. Welcome back to America. Boom, you're good to go. So it was the process of leaving India was really annoying. Getting to India was okay. But I was just so happy once I touched down. And then I checked my phone and I saw Trump working at McDonald's and I was like, you know what? This is why that's why America's the greatest in the world, right? Because that's actually happening right now. So back in America, and that's the fun part to be here. Okay, cool. So what do we got? New ring. So again, this ring, I was just joking right here. This is a gold ring. It's not a wedding ring, but I did get a gold ring. The reason I got a gold ring is because my dad had some gold that he had a gold ring that he wasn't wearing. And we essentially melted that gold ring and made a new one. That was a cool ring, but he doesn't wear it anymore. It's like from 30 years ago. And because the price of gold has gone up, obviously that gold ring has appreciated. And so my mom, who's really into jewelry, she bought a bunch of stuff and a bunch of dresses. And when she goes to India, we had to, you know how you get to check in one luggage bag? We had to check in 2 extra bags because of the amount of shopping my mom did. It was a bit insane. And we made a lot of fun of her because she was shopping like every single day instead of spending time with family, which is just hilarious. But she loves shopping. So we decided to get this gold ring because it was basically free when we melted the other one. And I like it. For those that saw some pictures of me in 2019, I used to have a gold ring that I wore a lot in college. And then I lost that ring. That also was another ring by my dad. And I lost it because we were moving in 2020. I put that ring on the treadmill to take it off when I was working out one day. And then I forgot to take it from the treadmill. Then we ended up getting rid of the treadmill. And then I lost the ring. So I haven't had this ring for like 4 years. And I really wanted this ring because I just like how it looks. So that's why we got that. That's why we got the ring. Let me see if I can pull up the 2019 ring. Yeah, this is the one I had in 2019. So I was like, you know what? I don't really spend on myself ever. This is basically free because we're melting an old one. So let me get a new ring. Now it does look like I'm married, but it's not on my married finger. So I think it'll look nice with a lot of outfits. Always looks nice with black and stuff. So yeah, we got a gold ring. And now we're just going to be rocking this ring with different outfits that we got going on. Tell us about your dad. Did he immigrate from India? What is his regionality? So a couple things on my dad. Yes, he immigrated from India. He was born in India. Then he came to the United States. But more importantly, what happened with my dad is that he got into a car crash while we were gone. And it was a pretty bad car crash. It was like 2 days after we left. He calls me up and he was like, "What's up? How you doing?" And he's like, "I'm just chilling." He's like, "I got to tell you something." I was like, "What happened?" He's like, "You know that new Honda we bought?" I was like, "Yeah." He's like, "It's gone." And I was like, "What?" So let me see if I can get the picture of it. It was bad. Yeah, look at this dude. So first of all, we're probably going to lose 10 grand on this. The car is being totaled. But that's okay because this is what happened and everything's okay. His health is okay. His he has no issues. He's fine. He went to the doctor, the checkup, all that stuff. So regardless of the 10 grand we're losing on this was the nastiest crash I've ever seen in my family. We've never had a crash like this. It wasn't his fault. He was driving, someone was pulling up, and then the guy pulled up without looking both ways. And then it was an 80-year-old man. So you could, probably the guy was just like not paying attention that much. And then boom, it was a crash. So we'll see what the insurance negotiation can look like. I do think, though, that this means now we're going to think of getting a Tesla. Because after my dad bought this Honda CR-V, he kind of had some second doubts because he was like, maybe we should, this was a hybrid. He was like, maybe we should just got a Tesla, especially with the EV tax credit they were giving. So as Doug says right here, Model 3 and Model Y, 0% starting today. I was telling my dad, hey, maybe we'll actually get a cheaper Tesla than this $42,000 Honda CR-V. And maybe it's time to go electric. So the good thing is he's okay. And so that did happen in India, which was a little scary, but he's doing okay. And now I don't have a car for like the next 3 months because he's going to be using my car, which is fine. I will not be able to drive to Dunkin' Donuts in the morning. So I'll have to make some Indian tea, which I'm tired of drinking, dude. I had so much damn chai in India. I'm so tired of it. But yeah, the good thing is he's okay, and it's a good thing. 42 for a Honda, right? Yeah, like after we paid for it, we kind of had like my dad kind of had those second doubts of like, man, maybe it wasn't worth 42,000, So I think he's thinking about a Tesla, dude. He's thinking about a Tesla. And I think the Model Y or the Model S is one of the things that he's getting excited about. So we'll see if that happens. Then you can do FSD vids. Yes, correct. Then we can do FSD vids as well. What else? What else do we have? Insurance will cut you a check. So he already talked to insurance. It's looking like it's not going to be a big check. I mean, it'll be a decent check, but there's still a down payment that I don't think we're getting back. And there's monthly payments we paid for the past 6 months that we're not getting back. It is what it is. It's one of those things where it's like, we can fight with insurance all we want, but if we don't get that money back, at least his life is good. Because this is ugly, dude. The airbag went off, everything. And the day he got into the crash, I asked, like, are you okay? And I think he was still in shock. He didn't realize, like, he had just been in a massive... It's just one of those things where you have a little bit of just, like, I can't believe that happened. So he's doing well now, which is good. But that's like, look at that, dude. The entire engine, all of that just destroyed. And he didn't have a single mark on him. Not a single scratch. So it's one of those things you're just grateful for, regardless of losing the money. How fast was the car that hit him? I'm not sure, but it came from a bad angle. And because it came from a bad angle, and I guess the car was speeding up, it led to that collision. And it was enough to cause that much of a crash. Amit, are the traffic and driving stories as terrifying as claims in India? Okay, so let's talk about traffic in India. And we'll do word of the day at the end of today's show. The traffic in India is unbelievable. It is insanity, and it makes you think that it makes you think that it makes you grateful for the fact that in America you have a lane and people can fit in their lanes. Like I did a lot of driving in India, not me, but people I was with, and it's unbelievable. Like there are literally cows, rickshaws, trucks, cars, scooters all at once, not respecting the lanes and just swerving in and out. And there's this like hidden rule between every car that says, hey, we'll get as close to each other as possible, and then we'll honk, and then you'll know to like slow down a little bit, and then we'll let the other guy through. It's insanity, dude. It's real insanity. I mean, like, there are many moments I was in the front seat of a car thinking like, oh, this is bad, dude. But the drivers there, they don't feel that pain. They just think it's normal. And because they think it's normal, that's how they end up driving. Like, I was driving yesterday back from the airport, and I just couldn't like as I was driving and people were staying in their lanes, they were actually stopping at the red light. You're like, wow, this is like a total 180 from India. So yeah, driving is insane, but what are you going to do? You have 1.5 billion people. You have a ton of demand, a ton of consumers, constant movement of transportation. Now, the lanes themselves on the highways are amazing. They have like 8-lane highways, which are incredible. But the actual driving through suburbs and cities it's a talent to be able to drive. Like, it's a real talent to be able to drive. So it is a bit scary. And America's a lot more cleaner and better. But, you got a lot of people in India, which is why there's a lot more driving. Are there a lot of car fatalities? So that's the thing. There's not a lot of car crashes, dude. And I'm still trying to get the stats on the car crashes. But from what I saw, there's very few. Like when you get a car crash in America, the police come and then the whole highway's held up because the police are there and they're filing the report, yada yada. You don't have time in India for the police to come and like sit there because there's so many cars. Like, you don't have the time, even if you hit someone, to like wait there and file a report, unless it's like an egregious crash, which I didn't see for the past 2 weeks. And you would think you would get close to some egregious crashes, and that didn't happen. So it's one of those things where the drivers are just so used to getting into these narrow areas and navigating it, that it actually leads to what it seems like is less crashes than in the United States. How's the food? The food was good. I didn't eat any street food, so I kept true to that. I made sure to stay away from the street food. The only thing I ate was home cooked meals, and if we went out to like a really good restaurant, then we had good food. The McDonald's in India was amazing. The spicy chicken sandwich at McDonald's, incredible. It's better than outside of Chick-fil-A spicy chicken sandwich, it's better than pretty much every chicken sandwich that I saw. I made sure to have no mayo, as always. Now, you think America loves mayo, dude? The amount of mayo I saw in India, like the just like when you order something from a fast food restaurant, when I had my sister with me because she's fine with mayo, and I saw the amount of mayo they like mayo a lot, so I had to make sure to have no mayo. But overall, food was good, nothing too crazy. Very modern food. They have Subway, they have KFC, they have McDonald's, they have all that stuff. So food itself was not too big of an issue. And I really protected my stomach throughout the 2 weeks. Like, there were days where I just didn't eat dinner. I was like, I'm not doing it. I'm not putting more stuff in my stomach. I'm just letting it chill out, because things can get really ugly if that ends up happening. So that's why I did not eat the street food. I just didn't want to take the risk a lot of times with eating that food. What do you think about the population issues and policy regarding it in India? I mean, look, the India wants a big population. They want to continue to a big population because it means more demand, more earnings growth, more potential for consumers, etc. But there's just not enough space. And so with that, you get a lot of modernization in the railway system and the trucking system and all that stuff that they're ramping up aggressively. But still, it begs the question, there's a lot of homelessness. There's not enough space. What do we do with that? And I don't think they have a solution to that yet. But they're not going to do something as stupid as China by stopping people from having kids. Like, they're not going to do a one-child policy. They're not doing anything like that. Like, that draconian form of policy is not going to be in effect. But they're going to have to find a way to use capitalism to uplift people out of poverty, because the more people you uplift, the more modernization you have, which helps with all the overpopulation. But I doubt they're going to, politically limit the number of children that people can have. Also, religiously, it's not like, India's they're a democracy, but they believe a lot in religion and Hinduism. And, in Hinduism, you're supposed to, have more, give more to the world. You're not supposed to limit yourself. So I don't think they're going to do that on the basis just off religion alone to stop people from having kids. Is corruption, bureaucracy, and efficiency a big thing there? That's how it's portrayed. But what did you see? Well, yeah, it's still there. It's decreased a lot over the past couple of years. My uncle did tell me if a cop pulls you over, which again doesn't happen often, but if he does pull you over, you can pay him $10 and just get through it. Like, imagine you were speeding on the highway and an American cop pulls you over and you just hand him a 20 and he lets you go. That's what happens on India every day. So that level of corruption is still there. I mean, we had a moment like that. We got stopped on the highway because there was too much traffic and we were trying to switch lanes and we almost switched the lane. There was in a big bus and like these group of policemen just like stopped us from switching lanes. They made us like come back into our own lane. And The bus driver got out and he was arguing with the guy, and they almost looked like they were about to fight. And then he came back into the bus and he just said, like, the guy's being a dick. And then my uncle said to hand him over a 500 rupees, which is $10. And I handed him a 500 note. And then he handed it to the guy, and then we were good to go. So I forgot. I literally saw that happen in front of us. Is it corruption? Yeah. The other argument you can say is it's efficiency. I mean, $10 to not be stuck in traffic for the next 4 hours was actually decent risk to reward. So is it corruption? Sure. Was it efficient? Yes, it was. So yeah, some of that's still there, but broadly across the entire country, from a top-down level, corruption is starting to go down a little bit more. But it definitely still exists. How many massages in total? I had, dude. So it was so funny, dude. I had 2 massages. The last day I had a massage in the morning before we got on the flight. And it was so funny because the massage itself cost 3,000 rupees, which is about $50 or something like that. And I got my back, my feet, my head, my face, all this stuff. And so at the salon, you had the guy give me a massage, and then you had a regular guy who was like the guy who owned the parlor, and he was counting the bills. And so I gave him the 3,000 rupees, and then I gave the guy who gave me a massage 2,500 as a tip. So I basically paid 80% of what I paid for the full massage as a tip to him. And the dude was so upset, the cashier. He was like, what the? He was like, why are you giving the guy a tip that's basically equivalent to the amount that you paid? And that's because I gave out a ton of money in India. I gave out like $1,000 just randomly as giving out more tips. So it was really funny to see the look on his face. But yeah, the massages were great. Again, the first massage I got cost like $5. It was 450 rupees. That guy actually came to my house, so it wasn't in a salon, so it was a lot cheaper because it was just a random guy traveling. But it was $5, right? And I gave him like a $50 tip. So I gave out a decent amount of money in India to people that I thought deserved it, and obviously, we're not doing the best in life, and hopefully that money could help them. So that was fun to do, but the cost of living was very cheap, dude. Very, 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 very cheap. Very cheap. There was no happy endings in these massages outside of my neck not feeling as like fucking like sore. Like they did like, it was a really good massage. If I wanted to get a massage in America right now, it'd be $90 minimum for like 45 minutes. It's ridiculous. In India, it's literally $10-15, and they spent 45 minutes completely like giving you an experience. And then again, the unit economics, the cost of services are just so low. Is there a tipping culture there? Not really, but I gave a lot of tips. But I mean, there is a tipping culture there. It's not as egregious as the United States, but like, yeah, there is a culture of tips. And again, a lot of work is undocumented, right? A lot of work, these auto rickshaws, these like a lot of this stuff is like not really held on the book. So whatever tips you can give them, they end up kind of keeping. What else? Did you get ripped off because you're a foreigner? No, not really. Actually, I was usually with family members, so they didn't tend to like overcharge me or anything. But even if they did rip me off, I would just pay it extra, dude, because at the end of the day, I was there to just spend money and give it out as much as I could. But didn't get ripped off too much from what they were charging. There are a lot of EV rickshaws in India as well. Like a lot of rickshaws I saw were EVs, were like electric vehicle rickshaws. So although I saw 0 Teslas in India, like 0 Teslas, I did see a lot of EVs and a lot of EV rickshaws as well. Traffic in India looks chaotic to Westerners, but just works. More minor accidents in terms of dings and scrapes, but far fewer fatalities. Exactly. 100%. And it's kind of interesting how that plays out because everyone just kind of knows how to operate there, which makes the traffic more bearable and makes the accidents and fatalities less bad. What else? Did you take a night off to enjoy the nightlife there? So I did take a night off with my cousins, and we didn't do nightlife because it was like 2-3 a.m. But we did have some of the most amazing chai I've had in my life, and it was like 2-3 a.m. It was just incredible. It was at this place. I forgot the name of the place. It's called like Chayos or something, and it was just the best chai. It was like 3 a.m. We just had like a party in our house, and everyone was sleeping, and so we went out. But Gurgaon, which is the city I was at, they have a bustling nightlife, like a New York City type of nightlife. And I didn't get to go explore too much, but next time I go back for a week, one of my cousins was like, just stay with me for a week. And like, because really when I go to India, it's more about seeing family and stuff and like grandparents. It's not really about enjoying the nightlife there. So next time I come back, I'll probably stay with him for a week and we'll get to really enjoy some stuff. But yeah, I didn't get to experience too much of the nightlife. One of the other things is a lot of my cousins and uncles, they're into the stock market. So not just the uncle that came on the show, but a couple of other uncles I have, they just love the stock market. So like the discussions I had for 2 weeks were great. Like I there was never a moment I was bored. I was always learning about a new company, learning about this, learning about that, India's economy versus American economy. There's so much stuff I was learning about. So it was a really exciting time just being there to talk about, a ton of different things that I actually care about. Sven says, love you, missed you, and no, I'm not gay. Appreciate it, Sven. Thank you for being here. The funny thing of it, so bringing up this whole gay thing and marriage, I did get asked a bunch of times by my grandmother when I'm going to get married. Didn't have an answer for her, but one time she said, so in Hindi you say ladka for a guy and ladki for a girl, right? That's how you say guy and girl. And so she said, hey, do you have any ladkis in your life, right? Any girls in your life? And for a second, I was with my cousins. For a second, I was thinking of saying, no, but I have a ladka. And oh my God, it would have been the funniest, like literally it would have been the funniest thing in the world. But I didn't say it because I didn't want her to have a heart attack, because she probably would have had a heart attack. Quite literally, she would have had a heart attack. So I didn't say it. But I told my cousins I was thinking of saying it. And they were like, yo, if you said it, that would have been funny. And I was like, no, let me not, she's getting older. Let me not do anything to push her over the edge. But yeah, they asked about marriage all the time. That's, in Indian culture, they tend to do that when it comes to getting married eventually. And look, I get it. I mean, look, at the end of the day, I don't blame the concept of wanting to get married by your late 20s. Like, I think that's a very reasonable thing to expect, even in the United States, because you're able, obviously, to then have kids and have a family and kind of have that life cycle play out. It's not for everybody, but it's not crazy to say that in your early 30s, late 20s, you want to start thinking about it. So, it's not a big deal, but obviously, I'm not getting married anytime soon. So it's one of those things where as soon as I start having a ladki in my life, I'm sure they're going to be very, very excited. But I wanted to say the ladka thing, dude. That would have been freaking hilarious. That would have been amazing. So you haven't told them about us. Actually, no. So you guys, the chat, the stream came up a lot. My uncle, he hypes me up a lot. And so I it's kind of hard to tell people what I do, right? So when people say like, hey, what do you do? You have to, you're a YouTuber. Okay, well, what does that mean? You talk about the stock market. All right, well, what does that mean? I had a lot of those discussions of people saying, so what do you do? It's like, well, I stream every morning and I talk to thousands of people about the stock. We're like, what does that mean? Like, no one really gets it. It's a hard career to understand. And I don't try to hype it up or gas it up or anything, because it's just one of those things where it's like, either you get it or you don't get it. You don't get it, it's okay. That's fine. If you don't get it, I don't really care. But my uncle, he's a different guy. He's like a hype man. So everybody we visited, he's like, do you know he has thousands of people every morning that tune into his show and listen to him about the stock market, and he's talking with all these people. You sat down with Vlad. You see this video with him and Alex Karp. And so my uncle hyped the shit out of me every time we met someone. And so you guys actually came up a lot because people didn't understand what it means to have a chat in the morning talk to you, right? Or like thousands of people listening to your market commentary. They still didn't get it because it's not doctor, lawyer, engineer, etc. And so my uncle did a good job of kind of like explaining it to a lot of people, because I didn't know how to explain it. And especially I definitely didn't know how to explain it in Hindi. Do I speak Hindi? Yes, but I'm not the best at it. Again, I know Hindi pretty well, but there are moments where there's certain words where I just can't figure it out, and then it gets a little awkward and I have an accent. So explaining what I do for a living, it's not easy to do. But my uncle definitely helped in the process of doing that. You should say I host a show on YouTube. I did, but then they're like, what does that mean? Because like people don't get it, right? They're like, okay, so you have a YouTube show. Like, what does that mean? And I'm like, well, I talk about the stock market every day. Like, why do you talk about the stock market every day? Like, well, there's news every day. Like, so why do people tune in? It's like to listen to the news. Like, so how many people? Like, a couple thousand. Why are a couple thousand people? It's like it gets into this string of questions where no one fully gets it, and that's why I'm just like, all right, I don't care. Like, if you don't get it, that's fine. But it's one of those new career paths that exists because of the democratization of the internet, and it is what it is. But my uncle did a better job at explaining it to more people. We need to do an market open in Hindi. Well, look, I'm going to be trying to cover more of the Indian markets and try to get a grasp on what's happening in India, even though we can't invest in it because Robinhood 2708, Nvidia 142. It's hard, Palantir 4290, to get a grasp of being able to invest in India, even legally, because they don't allow people to invest from other markets. So I'm trying to figure out different ways because the ETFs are like fine, but the ETFs are not the best exposure. Like I want to try to figure out is there a way we can actually apply for Indian accounts? Because the reason I'm even thinking about getting that serious about investing in India is because the growth there is just, again, I'll do more DD on the future. We'll do dedicated episodes to it, but 7% GDP growth, 4% inflation. Everyone's trying to beat inflation by investing in the stock market. And the stock market's actually growing, or GDP per capita is growing at 7%, which means the stock market's catering at closer to 15, 20%, which is not bad. It's not bad at all. And it's a hard market to, it's hard to replicate those results from a macro perspective across the world. Argentina is the only other country I see that kind of is resembling that type of growth. And they have 250% inflation. So they're a little bit far away from it really ramping up. So I think we got to invest in India somehow. I got to figure out how to get exposure. And once I do, I'll tell you guys what I'm investing in and how hopefully you guys can get a way to get there as well. Why was there so many cows in the streets? Cows are treated like a holy animal in Hinduism, which is why they don't fuck with the cows. They don't care, bro. There were cows holding up traffic going 90 miles an hour. The cars had to stop and let the cows walk across the road. So it is what it is. That's what it's like when it comes to cows. My uncle will try to make more streams. I know a lot of you guys liked him. He was pretty excited that you guys actually enjoyed his analysis. Again, my uncle, he's like a top executive at Citibank in Singapore. So he's used to public presentations and talking. He's not afraid of talking or anything like that. He's very used to that, all that stuff. But when it comes to 2,000 people and saying stuff and, not sounding that stupid and trying to, cogently express your thoughts, it does make people a little bit nervous, right? And so he was really happy that you guys enjoyed his session and that he was able to hopefully bring some value. And a lot of you guys liked him, which was really good. And he got to get bragging rights over his wife and his son because he had a great stream on my show. His son thought he would get roasted, and there was a couple of roasts here and there, but most of you guys liked him. So it was really good. It was fun to see that happen as well. Amit, if cows are holy, how does McDonald's sell burgers? McDonald's does not sell burgers. They sell chicken sandwiches. The concept of a burger doesn't really exist in India. It's chicken. There's a lot of chicken everywhere. I feel like India, I got to find some stats on this, but I feel like India is like the top importer of chicken because they don't eat beef. You can get it in India, but it's very rare to go to a local store and for them to sell you like a beef burger. It's usually chicken. Or a veg sandwich. So, there's not a ton of beef or burgers in India. Chicken is how we invest in India. Yo, low key. There might be a way to invest in India proxies without literally investing in India, just based on the pure demand that India has for certain asset classes, or not asset classes, but either commodities or raw materials, etc. For example, if India's industrializing steel, investing in steel might be a way to go long India. Now, that's not the best proxy, especially because it's not as proportional to India as it is with the rest of the world. But that's an argument for different things we have to find that can benefit from India itself. Do they raise a lot of chicken too? Yes. I was driving. I remember seeing them literally unloading the chicken from a bus. And my uncle, he goes to a shop where they butcher the chicken in front of him. And it's just like the way a lot of Indians shop for chicken. And his argument was, if you can see a chicken get butchered and still eat it, then that's a healthier way of eating chicken because you're not a hypocrite at that point. I thought it was actually a decent argument. He was like, if you can see a chicken get murdered in front of you and still eat it 2 hours later, then you are, it should be more enjoyable because you are less hypocritical about the fact that you're eating an animal. And a lot of India is still vegetarian, right? So there are people that have had to rationalize eating chicken in the face of the whole society not eating as much chicken. And I think that's a fair point. It takes away from the hypocrisy of eating chicken. Don't expect a steak dinner in India. Correct. Don't expect a steak dinner in India as well. Is beef against the law or just the culture? It's really the culture. I don't think beef is against the law, not from my understanding. Again, there are places in India where you can get it. And they don't have such strict religious rules. They're not governed by religion. So it's not like, you can't eat XYZ. But the culture is just not fond of beef and and eating cows or steak or any of that type of stuff. But yeah, that's some of the main stuff that we had in India. I think that's pretty much it. That was pretty much my whole experience. Look, I enjoyed it. It was fun. I hated being away, so I'm happy I'm back. It was kind of weird to be away, but we are back. Here's a picture of a bull. We did visit this palace in Jaipur that's like 600 years old, and it was a beautiful, beautiful palace. So we got to do some nice sightseeing. We stayed at a resort as well. There was a nice pool. See this mountain area. The biggest thing for me was I got to be with family, and it's been so long. It's been 5 years since I've been with family. And so I've, I just really cherished the time that I was with them. This is probably a meetup like this probably is not going to happen for another couple of years. And so I always got to remember that, there's only a few moments where we actually get to spend this much time together. And then when we meet each other, I'll probably be 30. The next time I meet them, my cousins will be closer to 18 years old instead of 13 years old. So, one of my cousins who's 13, he's in that video game phase. So I used to mess with him. I used to like go up to him. I would take off his headphones, like stuff you got to mess with the kid, right? He's like obsessed with playing Valorant, some video game, and I'll just like play with the screen and stuff. So it's like little fun, annoying stuff that I get to do when he's 13. He's not going to care when I do it when he's 18 because he's probably not going to care about video games anymore. So it's some of those moments that I cared about a lot, and I enjoyed experiencing him. I was trying to get him on the stream, but he's a little nervous. He wants to like do streaming, but I said, hey, do you want to say hi to everyone? He likes the stock market. He cares about his stocks, and he loves investing in all the stuff, even though his dad does most of it. But I know he's going to be older, next time I visit India. So it's one of those things I tried to enjoy while he was young, and while, the entire family was younger than they will be in the future. Greg, definitely missed your insights. Greg, thank you for being here. Amit, best prepared visa now. Yeah. The amount of jokes we made about my mom for not taking care of the visa situation, it was fun. Every time we would be leaving a random house, she would be like, all right, do you have your phone? I'd be like, yeah, do you have your visa? It would just be really good. Did you get to pet any elephants? Yeah, I did. I actually rode an elephant. I don't know if I have the pictures on my phone or my mom's phone, but I got to ride an elephant, and it was fun. Yeah, I don't think I have the pictures on my phone. Do I have them? Yeah, I probably don't. But I'll get those pictures for you guys, and that was fun. I got to do pretty much all the things that you get to do in India. We got to do, and it was just fun being with family, dude. It was just fun. It was really fun spending time with family, because it is hard to get those opportunities. So it was good to get to do it. Did you bring any stuff back? No, not really. I mean, this ring is pretty much the only purchase I made, and my mom did a lot of buying, but outside of that, nothing too crazy from India. I think now I am getting excited for 2025, not only from an investing perspective, but also from a growth perspective, personal growth. I have a lot of things in mind that I want to achieve in 2025. I think everyone, we should probably find a way to do this collaboratively. Maybe we have like a 2025 planning session on one of these Saturday nights, and we can kind of do some goal planning together as a community, because I think all of us, as we get into the final 2 months of the year, need to figure out what are our personal goals into 2025, whether it's health or whatever it is. For me, definitely a big one is health. I want to definitely get a lot healthier, definitely lose a lot more weight, all that stuff. And then professional goals going into 2025, right? So I think now I'm gearing up to hopefully not have the New Year's Eve resolution start in January, but start it at the end of October, so that going into January, we're at a much better pace. And, just keep going from there. It's one of those things where we got to keep advancing, keep going forward. And 2025 is going to be an exciting year, I think, in a lot of different ways. And so the question is going to be, how do we best capitalize on it and keep going from there? Doug says his 2025 personal goal is to lose 85 pounds and get a private pilot license. That would be really cool. Obviously, Doug is having a great year in the market if he's thinking of getting his own jet and becoming a private pilot. I get it, Doug. You didn't have to tell us that you're having that great of a year in the market. We can tell based on that comment. So that's exciting to see as well. The idea of New Year's resolution is dumb. Why wait? Start now. I agree. It's just one of those things where it's when you get a refreshing start, everyone feels motivated, but then the motivation fades very quickly. So the question becomes, how do we uplift that motivation? For 2024, I think my biggest New Year's Eve resolution, I had two resolutions. One was to get healthy, and I think probably failed at that, if I have to be honest. gained more weight than I should have in 2025, in 2024, and just didn't have the best diet, right? So I can admit I failed at that. But the other big goal was to take social media and YouTube seriously. And I would say, you know, progress has been made on that. So the big goal was to like go all in on content creation. And I think, you know, that is developed into something that has a foundation of growth ahead of it into 2024. Obviously got to meet Karp, Vlad, a lot of big moments happened that really like set up 2024 to go well. But health-wise did not go well. So I think 2025, the question is, can we maintain health while also maintaining professional growth, at least for me, while also diversifying into other different ideas that I have and trying to figure out how we can, you know, take this to the next level. So it's a lot of game planning I want to do over the next couple of weeks to get ready. And the biggest goal I have for the next 2 months is to not let the November, December, Christmas, Thanksgiving season lead to even more deterioration of health. Because it's very easy to say, you know what, last 2 months of the year, let me just eat whatever I want. I'll start fresh in January. I've done that God knows how many times. I think for the last 5 years. And I'm pretty sure a lot of people in the chat are like, you know what, I'll just eat whatever I want and we'll think about it in January. I don't want that to happen this time. This time I want to start fresh in November, not let Thanksgiving or Christmas add unnecessary pounds and, you know, go better into January. So that is the goal as well. Jose says one easy change is to stand instead of sit during the show, get an adjustable desk and stand for 20 minutes, sit for 5, repeat. So one argument I'm thinking of, or one change to the studio, is I'm thinking of getting a big standing desk, thinking of moving the camera back, having more professional lights, having 3 desktops. So like I want to buy 3 actual screens that I can look at constantly and have a more professional setup where I'm standing the whole time. Because I don't have a problem standing. And if I need to sit, I could probably sit during the show if I like really get tired. But I have no problem standing. I'm already moving my hands like crazy. If I'm standing and moving my hands versus sitting and moving my hands, it's not that big of a deal. And so instead of sitting for 3.5 hours every day, it'd be nice to stand. But I have to totally revamp the studio to do that, including this background. Like everything has to be changed in this room. So I think another thing going into 2025 is how do we up level the studio to like A, become more professional, B, have a better dynamic and look and angle, and then C, make sure that I can stand up the whole time versus have to sit down and still navigate everything the way I need to do it. So that's what we need to do. We're going to keep the bricks no matter what. We might just expand the bricks there. You see how the bricks are breaking off right there? We might plug in some more bricks, you know, might have to do some different things with the bricks, but the bricks will stay no matter what. Watch Roadhouse. You'll get motivated for the gym. Is this a show? Roadhouse? Oh, it's a film? 2024 film. Okay. I got it on the list. Let's see if this one's good. 6.2 out of 10 on IMDb. Not the best rating, 60% Rotten Tomatoes, but if it's a motivational one about the gym. Conor McGregor's in it. Post Malone's in it. When did this movie come out? By the way, have you guys heard about Joker 2? Apparently that movie was one of the worst movies of all time. And I'm scared to watch it because of what I've heard happens at the end of the movie, which I'm not going to say. I don't want to spoil it for anyone, but it's like, I don't know, dude. The first Joker in 2019 was amazing. But apparently the second one is just like god awful. Like horrible. And so it seems like 2024 is ending out with not the best movies. Yeah, I heard it's a musical, bro. Why is like the Joker should not be a musical? It's and Lady Gaga's in it. All this, I don't know, dude. I heard the ending was really bad, dude. Like my cousin watched it right before she came to India, and she was telling me it was one of the worst films she's ever seen. The box office was horrible as well. It was like I think it was like 40 million or something, which was significantly lower than what it did. Yeah, 37.8 million, much lower than the first one it had in 2019. So Joker 2 didn't have the best thing. Cool. Okay, I think that's pretty much it. Is there anything else? I know we got a lot of news to cover throughout the rest of the week, so we'll get into that. Tesla earnings are tomorrow. That's an important thing. The biggest takeaway I have is Q3 earnings are off to a phenomenal start for the stock market. And if Q3 earnings continue to do what they've been doing, I don't know how the market doesn't love these results. And so now it's up to Nvidia, Tesla, Google, Microsoft, Amazon, etc. But if they can put up the numbers as the other companies have been putting up the numbers, I think it's going to be in a good situation. And we should see a good end of the year. And if it's a good end of the year, then we get ready for 2025 and keep going from there. So hopefully it's not too bad. All right, word of the day. Word of the day for today, and then we'll get out of here, is coagulate. Coagulate.
Coagulate or coagulate.
Okay, so it's coagulate. To change from a fluid into a thickened mass. The chef heated the eggs gently, ensuring they wouldn't coagulate too quickly. As the blood began to coagulate, the wound stopped bleeding. Okay, so to change from a fluid into a thickened mass. Oh, Zocold knows about this because he's a nurse. So immediately, yeah, blood. That's the Zocold. That makes sense. So he picked onto that immediately. All right, that's your word. Coagulate. Another word of the day. After 2 weeks of no words of the days, we are back in motion, back into action. I'm not trolling the pronunciation, dude. I've never heard of this word before. You guys, it's the same Amit from 2 weeks ago. You think after 2 weeks I would get better at pronunciation? No, that did not happen. If anything, I got worse at pronunciation. Same Amit, just back in the United States, not understanding how to say certain words. All right, that's it, folks. Back in the U.S., I am so happy to be back. Thank you all for being back. Thank you all for joining again, once again on the show. It's always a little bit of anxiety, when you take days off, kind of, how people will interpret when you come back. But from the messages I got, a lot of you guys said that you were just waiting for me to come back. And that means the absolute world to me. Again, this is one of those things I don't take for granted. I've seen a lot of creators take their audience for granted. Seen a lot of creators trying to find the cheap way out, or just like not really care about the journey of building a real community. And I think we have something special here. I think it can grow rapidly over the next 5 years. And I think if I can remain authentic and humble and continue to up-level my skill set of discussing the markets, then it can be something enjoyable that people come back to every day. So yeah, I appreciate you guys coming back, enjoying it. We'll be back for the market close, back on our regularly scheduled programming today. We'll have Jason Technical Tuesday. That'll probably be a very long show, probably 2-3 hours, getting into all the technicals that we got going on. And yeah, then we have Tesla earnings tomorrow, and we have a lot of earnings next week, and we'll keep going from there. My birthday is this Sunday as well. So I kind of forgot that I'm turning 27 on Sunday, but I'm turning 27 in the coolest of ways because, to be honest, what is the goal of life? The goal of life is to do something that you enjoy doing every morning, right? I think that's the point of life, to wake up every morning and enjoy what you're doing. And for lots of people, the journey of getting to that point is very difficult. And for the past 7 years, since I turned 20 years old, it was very difficult to kind of figure out how do you get to the point where you wake up in the morning, you're able to make some income off what you're doing, don't hate the life you're living, and have upwards trajectory and mobility, which is, I think, the trifecta, right? You're able to make some money, you're able to enjoy the 9 to 5, the workday, and then there's room for upwards mobility. And currently I'm in that position where, there's some income that is being produced. It's not as much as what a lot of my friends are making inside of their fancy corporate jobs, but that's okay, because the upwards potential on this media enterprise to me is gigantic. And I think it's worth taking a temporary income hit to be able to get into that long-term vision. And then the final question is, do I like what I'm doing? And I fucking love what I'm doing, dude. This is it's one of those things where I feel incredibly grateful, incredibly blessed, because I'm a professional yapper. I love listening to myself talk. And, as I listen to myself talk and learn how to continuously get better at professionally yapping, the fact that other people enjoy the yapping and the communication skills, it means the world to me. So, for someone who loves to talk, I don't know if you could have picked a better job. And so we get to be here every day, understand the stock market, and we get to make some fucking money, dude. We're not talking about sports or politics. We're talking about the stock market, dude. Let me tell you, Robinhood going to 27 while I was in India, it made India more fun, because when you wake up at 1:30 a.m. or what was it? No, 7 p.m. market closed at 1:30 a.m. and you see your portfolio doing a little bit better than it was the day before, because Robinhood's breaking new 52-week highs, and made India an even more enjoyable trip. It's funny because I de-risked out of my Robinhood position. I took out the initial 40 grand that I put into the company off the idea that if I go to India and Robinhood's stuck or it falls 10 or 20%, I don't want to have to be staring at my portfolio sad with all the red, because I want to enjoy time with my family. I did not think of the opposite, which is that what if that motherfucker explodes while you're in India and then you're with your family, and not only do you get to enjoy with your family, you get to see your portfolio actually go up a decent amount. Like I didn't think that world would exist, but that world ended up happening as Robinhood broke above 25. And so now we got to keep this range. We got to end up the year well. Hopefully we can do that. I have a lot of faith in the company. I think this investor day they're doing in December is going to be incredible. Hopefully I can make it. It's in New York City. I got to find out who I can talk to try to get to this investor day, because that would be really fun to get there. It's literally an hour away from me, so that would be fun. And I think that legend thing they showed off is just fantastic. And the street is realizing how much momentum they can bring to the company's earnings. So, India itself was good just based on the fact that the company was doing well, portfolio was doing well, broader time spent with family was doing well. All of that can go away, if we get into a little bit of recession or if things go backwards. So not trying to say we're out of the blue yet, but the fact is we get to wake up every morning, analyze the markets. It's been a good year making money. Hopefully we can continue that momentum over the next couple of years and keep things going forward into the future. And that's it. Pound your future price by the end of this year. I think $40 at the end of the year is reasonable. My first price target was 35 after Q2 earnings. Now I'm kind of upping it to 40. I still think that's a little bit aggressive unless they have a good earnings. If they have a good earnings, I think we hold 40. Could I see 45, 50? Yeah, they have to have a really good earnings. Do I think that's going to happen? Not this quarter. I think the next 2 quarters you get to that 40, 50% growth, hopefully. So I think 35 to 40 by the end of the year is really reasonable. And if that happens, then that's not going to be too bad. Debut album name, Professional Yapper. Correct. Professional Napper. Yeah, it is my golden birthday. I forgot I learned what a golden birthday was in India. Apparently when you turn your age on the day of the birthday, that's a golden birthday. So, yeah, October 27th, turning 27 will be a golden birthday for me. All right, that's it. Thank you, everybody. Appreciate it. It means the world. I'll be back for the market close. Back in action every single day with the bricks in the background, as always, continuing to yap about the global capital equity markets and do what we need to do. Thank you, everybody, for being here. It means the absolute world. Thank you for all the messages you guys sent as I was gone. Happy to be back. Get back into motion and keep this show going. Thank you, everybody. Have a good one. I'll see you guys at 3:45. Bye, everyone.